bow our head and put ourselves in the presence of the Lord. Dear God, we offer everything to you during this seminar. May we ask for your blessing and divine providence that the activities set for this undertaking be successful and effective. May we also retain the invaluable knowledge and learning experiences that we derive from this activity. We pray that you bless all the committee in charge, that they fulfill tasks responsibly, that the objectives they have set may all be achieved. You are generous as blessing would mean success of this seminar. We know that without it we can do nothing. Maybe believing witnesses of your genuine love through the implementation of the knowledge acquired through this activity. Grant us your divine wisdom as we about our daily tasks after this seminar. This we ask in Jesus' name, Amen. As we about our daily tasks after this seminar. This we ask in Jesus' name, Amen.
Good morning, everyone, and welcome to our free webinar on transfer pricing. But our topic is about intangibles. No? This is the second of the series, and our first is about the financial transactions and also intangibles. No? And today we have first topic in the morning is about accounting standards on recognition and valuation of intangibles. And in the afternoon, we have the presentation of intangibles in the financial statements. No? So in the afternoon, aside from this presentation of intangibles in the financial statements, I also give you the list of intangibles. No? Kasi sa iba't ibang authors, napaka-specific po ng kanilang mga ginagawang aral about intangibles, and there are so many intangibles recognized as of now. Now, I would like to call on our participants before we start with our lesson, with our topic. Parang akong nanibago sa lecture for 2 months, no? Hindi ako nakapag-lecture. Okay. So I would like to call on Absalud Elena from Caloocan City, Alusiman Janet from Carmona, Cavite. We have Sir Chito Barangco, no, always. Nag-aaral din si Sir Chito sa atin dito ng certificate program ng transfer pricing. We have Convento, si Ma'am Yoli, no, from Olongapo City. Good morning sa inyo lahat. Si Ma'am Yoli Convento. We have Corpus Justine Nicole from Caloocan City. Devero Renalyn from Muntinlupa City. Sir Ray Formoso, no, from Antipolo City. We have Lalong Isip Loida from Sampaloc, Manila. Manawis Angelica Joy from Baguio City. Nartates Saisibel from Calamba City. We have Pimentel Joanna Crisa, San Juan, La Union. We have Ramos Abigail, Digos City. Reyes Gina Marjorie from Cubao, Quezon City. We have Rivero Rowena, Valenzuela City. Wala na. Si Ma'am Lilian niya, wala pa? Oh, sige. So, but yung nakaregister sa atin is ilan lahat? 68. No, 68 po yung lahat na ano sa atin. Okay. Si may apat pa. Nianto Mo Chamad Akbar from Indonesia. So we have participant from Indonesia right now. Thank you very much, no? So English tayo because we have other participant, no? Who cannot speak Tagalog. Lumbang Merle Cordero from Pampanga. Tol Lora from Davao del Sur, and Aquino Joy from Quezon City. So, good morning everyone. I would like to inform you also about forthcoming seminar here. No, we have a two-day webinar for tax preparer, and that is November 18 and 19. No, we also have a free webinar for bookkeepers on November 29 and 30. That is, for day one, we have recording of transactions in the books of accounts. And for the second topic for day one, we have the compound entries, adjusting entries, and closing entries. And then second day, preparation of basic financial statement based on records. No, based on records. The one that has been recorded in your books of accounts. And then we will continue with the second topic, computerized books of accounts, revenue regulations, VIDAS 1, and e-sales reporting. I choose to discuss e-sales reporting because there are so many concerns about e-sales reporting. The penalties are so high, and there is a little compliance from the taxpayer for those who are using a cash register machine. No? We have 6 days webinar for accredited tax agents, but up to now, nobody registered, so I don't think this will push through. Okay, so that is all for November. We don't have schedule for December, no? We will resume our seminars on January. Okay, and for January, we will be launching our certificate program in transfer pricing that will be online course for 10 days. And the topics will now include permanent establishment, international taxation, tax treaties, because and also related to transfer pricing. Okay. Okay, so let's now go to our lecture proper. So this morning, our topic is about accounting standards on recognition and valuation of intangibles, and in the afternoon, presentation of intangibles in the financial statements. Okay, so our first question is, why measure or value intangibles? No? Because intangibles is very hard to measure. So why is it that we have to measure or value intangibles? To improve the internal performance of the company. That is the first reason. No? To improve the internal performance of the company. Why? Because the intangibles, for me, is more important than tangible. Why? Because all value drivers are intangibles. So the performance of the company is being driven by these intangibles. So it is very important that the company should know also how to measure or value intangibles. And in the afternoon, I researched so much about these intangibles that I have to attend the International or the World Convention of WIPO in Shanghai, China in 2016, just to know more about intangibles. And this afternoon, I have research on what are the intangibles. They are very, very specific to the company. So another reason why we measure or value intangibles is to inform the public of the value of intangible assets that the company owned. And of course, the valuation, the proper valuation, because if you fail to value correctly the intangible, that can also be self-serving and very subjective. That's why there must also be some standards in valuing intangibles. Another reason is to uncover cost or to explore value creation opportunities. There is so much opportunities out there, no? And they are all driven by these intangibles. For your information, I used to look at the sky, no? I used to look at the universe. And I just imagine, because we are now using artificial intelligence, we are using software, we are using logic to um, to have this computer works. Then I tried to look up at the universe, and I told myself, what are the system or the operating system? No, how huge is the operating system of the maker of the universe to make this universe working? You can just imagine, because the operating system of the computer, in order that it will work, requires an operating system. How about the universe? The universe is working. No, very, very powerful at that. And we are not barred of adapting those system. Why? Because we are part of the universe. So in ourselves, we are also very, very powerful. Only that sometimes a person failed to recognize and to value those intangibles within him. So for the accounting standards, we have International Accounting Standards 38 that governs intangible assets. No? So it outlines the accounting requirements. Okay? And intangibles are non-monetary assets without physical substance. Why? Because they don't have physical attributes. You cannot see, you cannot touch intangibles. No? Without physical substance and identifiable. No? They are separable, arising from contractual or other legal rights. There are so many kind of intangibles. No? We will discuss that this afternoon. Intangible assets meeting the relevant recognition criteria are measured at cost. Actually, for tax purposes, at cost talaga. Even if we have accounting standards, that's why at the end of the tax returns that we are filing, there is always reconciliation between accounting income and taxable income. Why reconciliation? Because for tax purposes, we use different standard of costing, and that is cost. No? In accounting, we use the fair value, but in in taxation, we use the cost. No? So intangible assets meeting relevant recognition criteria are measured at cost initially, and subsequently measured at cost or the revaluation model. And this is the source of dispute arising, no? Transfer pricing issue arise from this valuation of intangibles. And many transfer pricing cases now uh, arise from the valuation of intangibles. No? That the taxpayer uses a different method, and then the tax authority uses another method. That's why if you try to look at the transfer pricing law here in the Philippines at Section 50, which is the same with that of Section 482 of the IRC, no, Internal Revenue Code of the US, our transfer pricing law does not mention about intangibles, while Section 482 of the US transfer pricing law, they have additional statement, no, sentence at the end of this section 482. This states that for intangibles, it should commensurate with the income approach. So not only the cost is the basis of valuation of intangibles, but it should be commensurate to income approach, meaning the income that it can generate. So not only the cost is the proper valuation of intangibles, but also the income that it can generate. No? Okay. So subsequently, intangibles are measured at cost using the revaluation model and amortized on a systematic basis over their useful lives. But of course, there are intangibles that cannot be amortized, just like goodwill, because we have one transfer pricing case that this companies, group of companies, form different corporations, they make a complicated structures, and then dissolve one corporation, and then or merge with other corporations, and then they recognize goodwill, a very, very huge amount at that. And when they form the existing corporations with a huge amount of goodwill, they amortize the goodwill, no? So that was a transfer pricing issue, and that was disallowed by the tax authority. Okay, so what is the accounting standard for intangible assets? The International Accounting Standard 38. No? And let's try to take a look at the history of this IS 38. No, it was revised in March 2004, and uh, here's the history of the IS 38. No? So in February 1977, there was an exposure draft, no? E9 accounting for research and development activities. Why research and development activities? Because mostly intangibles is the result of research and development. No? And we also have our task laws guides for research and development. No? And in July 1978, the IAS-9, Accounting for Research and Development Activities issued, which was effective January 1, 1980. And then in August 1991, there is another exposure draft, E37, Research and Development. In December 1993, IAS-9, Research and Development Cost issued. Operative for annual financial statement covering period January 1, 1995. No? So imagine, no, it was drafted 1993 and took effect on 1995. So 2 years. In June 1995, there was another exposure draft, E50, and this is about intangible assets. No? It was published. So when does intangible assets, the term, started in 1995. No? It started with research and development. And then in 1997, E50 was modified and re-exposed as exposure draft E59, intangible assets. In 1998, IAS 38, intangible assets issued. And it becomes operative on July 1, 1998. Imagine, September 1998, so retroactive. No? In March 2004, IAS 38 intangible assets issued. So 2004, it was formally classified as intangible assets. Applies to intangible assets acquired in business combinations occurring on or after March 31, 2004. No? Or for annual period beginning or on after March 31, 2004. In May 2008, no, it was amended by improvements to IFRS, no, IFRS, the International Financial Reporting Standards, on advertising and promotional activities, units of production, method of amortization. So it was here that intangibles they are beginning to amortized, no? And we will see also how the intangibles are amortized and what are intangibles that can be amortized and what are the intangibles that cannot be amortized. So effective for annual periods beginning on or after January 1, 2009. We have on April 16, 2009, amendments, no, on IFRS and measurement of intangible assets in business combinations, or this is what we call as restructuring now, no? Business restructuring. Effective for annual periods beginning on or after July 1, 2009. So there was amendments to this intangible assets. December 2013, we have the annual improvement to IFRS, no, for 2010 to 2012 cycle. Which is about proportionate restatement of accumulated depreciation under the revaluation method, no? Which was effective July 1, 2014. In May 2014, another amendment, clarification of acceptable methods of depreciation and amortization. So it was clarified. Effective periods beginning January 2016. Okay. No, so that was the latest, no, the latest amendment. Okay, so that's how the accounting standards for intangibles evolved through the years. Okay. So related interpretations, we have IFRIC, IFRIC 12, about service concession arrangement. We have IFRIC 20, stripping cost in the production phase of a surface mine. IAS 16 supersedes, no? Kasi the about mining companies, the intangibles on mining companies governed by IAS 16, no? Not IAS 38. Also, SIC 6, cost of modifying existing software. SIC 32, intangible assets on website cost. No? Because websites are also considered intangible. Although there are authors, some authors, that the cost of the website, according to them, should be expensed immediately when income. No? So amendments under consideration by the ISB, no? International Accounting Standards Board. For the research project, the rate regulated activities and also the intangible assets. No? And this is being supplemented by the OECD. No? The OECD, which is the Organization for Economic Cooperation and Development, because they are also working so much on intangibles. Why? Because there are so many issues that crop up involving intangibles. So they cannot do away with defining specifically the meaning of intangible, no? And make standards or regulations about intangible assets. Okay. So for the summary of this IS 38, we have the IS 38 that prescribe the accounting treatment for intangible assets that is not dealt with specifically in another IFRS, no? International Financial Reporting Standards. No? So intangible assets should be recognized if certain criteria are met. No? So intangibles should only be recognized because there are also what we think are intangibles, but they for accounting purpose, they should not be recognized, no? And when can they be recognized? If they are, there are criteria that we can use to recognize these intangibles, no? Okay. So IAS 38 applies to all intangible assets, no? Except or other than for the financial assets, it is governed by IAS 32, the financial instrument, no? For exploration and evaluation assets, there is IFRS 6 for exploration 4 and evaluation of mineral resources. That's why they are not under IAS 38, no? Expenditure on the development and extraction of minerals, oil, natural gas, and similar resources issued by resources, intangible assets arising from insurance contracts issued by insurance companies, intangibles assets covered by another IFRS, such as intangibles held for sale, governed by IFRS 5 on non-current assets held for sale and discontinued operations. So that is IFRS 5. No? For deferred tax assets governed by IAS 12 on income taxes. For lease assets governed by IAS 17, leases. Assets arising from employee benefits also governed by IAS 19, employees benefits in 2011. And goodwill governed by IFRS 3 on business combinations. No? So those are the coverage, or those are the exceptions, or those are the um, those are the things that are not under IAS 38, no? So they have their own accounting standards to follow. Okay. So let's now try to take a look at the definitions, the key definitions. Why? Because definitions are very important. When your case reaches the court, they always refer to the definitions. Why definitions are very important? Because it will explain, no, the scope, or it will decide when some issues crop up. No? So intangible assets are identifiable. No? Because when the asset is not identifiable, then it cannot be an intangible asset, no? For tax purposes or other purposes, no? For legal purposes. Unidentifiable non-monetary asset without physical substance. No? So walang physical. An asset is a resource that is controlled by the entity, no? But that asset is controlled by the entity as a result of past events, no? Just like, for example, purchase or self-creation, the company buy another company, with a goodwill. So, or self-creation through research and development. That's why if you try to take a look at the history of the IS 38, it started with research and development. No? Because through research and development, you create. No? And mostly the result of that research and development are intangibles, and from which future economic benefits, so this is another criteria, and from which future economic benefits, inflows of cash or other assets are expected. No? So they are the result of past events, and then there is future economic benefits. So the three critical attributes of the intangible assets. Okay? So very, very important, identifiability. So it must be identified what kind or what type of intangibles it is. And then we have also control, no? Power to obtain benefits from the assets, so that intangible should be under the control of the owner. No? And another is the expected future benefits that the intangibles will be provided to its owner. No? So there is unexpected future economic benefits. Okay. So for identifiability, we can say that this intangible assets is identifiable when it is separable. No? Separable, capable of being separated and sold, transferred, licensed, rented, or exchanged, either individually or together with a related contract. No? So we can say that this intangible is identifiable, no? Kasi it can be separated, sold, transferred, licensed, rented, or exchanged individually or together. So, examples, we have patent copyrights, no? And aside from that, they are separable, they are also registrable. Or arises from contractual or other legal rights. So those the component of identifiability. They arises from contractual or other legal rights, regardless of whether those rights are transferable or separable from the entity or from other rights and obligations. So they can be arising from contractual or other rights. So that can be transferable or separable from the entity. So it depends on the kind of intangibles, no? Because there are intangibles that are not separable, no? Just like goodwill. Goodwill is not, you cannot separate goodwill from the entity. Okay. So example of this intangible assets, but these are not all inclusive. Why? Because we will be dealing of more example of intangibles in the afternoon. No? So for the sake of discussion, now these are some of the examples of intangible assets. we have patented technology. And when we say patented technology, this patent, one say that it is patented when it is registered in the Bureau of Patents. And now here in the Philippines, the Bureau of Patent is already included in the IPO or the Intellectual Property Office, which is now situated in McKinley Road in Taguig. No? So we have the office there. And if you want that your patent is internationally protected, then you can always register it with the WIPO, no? So World Intellectual Property Office. And then another example of intangible asset is the computer software. So computer software, there's a lot of computer software. And I'm so happy because I'm not so literate with the computer, no? Because when I started my career, no computer yet here, no? So I'm so happy because I discovered that once you have developed the computer software, it is there, no? And it will not be lost, no? Software that you created. It's always there. And then we have the databases. There's a lot of databases. In our tangible now, because this is in relation with transfer pricing, no? Because there are so many disputes arising from this transfer pricing now. And if you are a transfer pricing analyst, then you cannot do away with, because when you make research, when you make your transfer pricing analysis report, you need information. And when you can get this information from the databases, and these databases are very expensive. No? When you buy information, are very expensive. And there are a lot of databases all over the world, no? That you can buy information. They store, they gather information, and of course through research, and then they offer it to public. No? We have trade secrets. They are also intangibles, but these trade secrets usually are not registrable. Why? Because the moment these trade secrets are known to public, then they cease to be a secret and they lose their value. That's why they are termed as trade secrets, but they are also intangibles. We have trademarks. Trademarks are also registrable. Trade dress, no? I just discovered this, no? Although yung mga research ko, the research that I made was a long time ago, no, since that, 4 years ago. But this trade dress can also be an intangible assets. Why? Because of its color, its design, the packaging, no? Newspaper mastheads. There are some accounting, no, or authors that the newspaper mastheads are not intangibles. But in this research that I made, they consider newspaper mastheads as intangibles. So what is masthead? Masthead are the uh, title in the newspaper that catches attention from the audience. No, sometimes it is the catching portion of the newspaper. No, because newspaper are published every day, and there are different title or mastheads in that newspaper. So newspaper mastheads are also considered intangibles. Internet domains, no, internet domains are considered also intangibles. Video and audiovisual material, motion pictures, television programs, they are also considered as intangibles. And we have customer list, no? Although sa accounting standards natin, sometimes they are saying that this newspaper mastheads, the customers list are not intangibles, no? But advocates of intangibles really classify this customers list, newspaper mastheads as intangibles because of the value, no, that they offer to the owner. And we have the mortgage servicing rights. No? Mortgage servicing rights. Licensing, royalty, and standstill agreements. No? Import quotas. Import quotas, example here in the Philippines, we have the sugar, no? Sugar quotas. And they are, why are they considered intangibles? Because they are already considered as sales, no? Why? Because once you have the import quota or export quota, you are already sure of your buyers, no? So you will not look for the buyer in order to sell your product. So we have export quota, sugar, no? Especially in the U.S. And then we have franchise agreements. You know, these franchise agreements are usually granted sometimes by the government and sometimes by the private entities. Example of these franchise agreements are the franchise, no, yung line or routing ng transportation. For the private franchise agreements, we have these restaurant operations just like Jollibee and McDonald's, no? We have customer and supply relationships, no, including customers list. And then we have the marketing rights, no? I don't know how these marketing rights are developed or granted, no, the marketing rights. Yes, yung marketing rights granted, no? Okay. So intangibles can be acquired through purchase or through business combination or through a government grant or by exchange of assets or by self-creation. No? By self-creation, we mean internal generation through research and development, through sa Japan, no, sa MITI nila, yung economic trade and industry nila, no, yung economic nila, the internal generation of those intangibles are very, very specific. No? I will give it to you this afternoon. No? We will deal with it this afternoon. So for recognition purposes, the recognition criteria, no, there are three, no, recognition criteria for intangibles. No? You can only recognize intangible assets when it is probable that the future economic benefits attributable to the asset will flow to the entity. No? So there is an economic benefits because without it, there's no use of that asset. No? It's not asset when there is no benefits. That's why we say that if a person is of no use, no, you are just a liability. But if the person, no, personally is a good person, then they will say that that person is an asset to the family. No? So there is a benefits. And for purposes of intangible assets that we recognize in our financial statements, we mean the economic benefits. No? Okay. Another criteria is the cost of the assets. No? And that cost of the assets can be measured reliably. Why? Example, if it is generated through research and development, then how will you determine the cost? Of course, the actual amount that you spend for research and development, just like paying the experts, the consultants, paying the employees involved in the creation, especially if it is software, no? So the cost of the assets can be measured reliably. Otherwise, it cannot be recognized, no? Okay. So the requirement applies when intangible asset is acquired externally or generated internally. No? So IAS 38 includes additional recognition criteria for internally generated intangible assets. No? So what are the criteria for internally developed assets? No? Probability of future economic benefits must be based on reasonable and supportable assumptions about conditions that will exist over the life of the assets. And these are the source of dispute, no? This probability of future economic benefits, just like in case, no? Wherein the taxpayer um, win the case over the tax authorities. Why? Because the tax authority value the intangibles in infinity, no? Parang walang katapusan, no end. But the taxpayer was able to produce evidence that was asset under dispute is good for only a limited time. No? In that case, the taxpayers win or won over the tax authorities in that case. No? Because if you believe in infinity or endless, no? Yes, maybe there is, but it is not applicable to some asset. No? There are assets that has a life or finite life. No? So the probability recognition criteria is always considered to be satisfied for intangible assets. No? So acquired separately or in a business combination. The disputes in transfer pricing involving these intangibles mostly as a result of merger or consolidation or business restructuring. No? Because during this merger or restructuring of the companies, you have to value the assets that you're going to transfer. No? And usually, the cases that arise, especially in the United States, are the valuation of these intangibles. If recognition criteria not met, okay. So in some instance, recognition criteria not met, what happened to the intangibles? If an intangible does not meet both the definition of and the criteria for recognition as an intangible assets, then IAS 38 requires the expenditure on the item to be recognized as an expense when it is incurred. No? So when it cannot be recognized as an intangibles, but the company already incurred expenses, then it should be charged as an expense. But of course, you have to see to it also if it passes the criteria of the tax authority, especially here in the Philippines, we have some criteria about outright expense. No? So if they can be deductible uh, from the gross profit or it is qualified as an operating expenses in order to be deductible for income tax purposes because it can be directly deductible from your written earnings, but for tax purposes you cannot deduct it. There are some expenses, especially if it is not related to the operation. No? So those operating expenses are not related to the operations, then they cannot be um, expense for tax purposes. But of course, for accounting purposes, you may. Okay, so for business combinations, no, because there are so many problems when business combinations comes in. Why? Because the two businesses combine. No, there is only one existing business. So how are you going to value the assets that has been combined? No? So the fair value of an intangible acquired in business combination can be measured reliably. Okay. So how are you going to measure and that measurement is reliable? So the expenditure included intangible item does not meet both definition and recognition criteria should form part of the amount attributed to goodwill recognized at acquisition cost. No? So if it cannot be attributed, no? So and then the recognition criteria are not met, so you're going to attribute it to goodwill. No? So that is what the I-38 you have to attribute it to goodwill if you fail to recognize it because the criteria for it. Okay. So, reinstatement. The standard prohibits entity from subsequently reinstating an intangible at a later date an expenditure that was originally charged to expense. So, prohibits. No? So you cannot later on recognize the intangibles when you already expense the cost of that intangibles. No? You already claim it as an expenses. So initial recognition for research and development cost. This is initial recognition. You may charge all research costs to expense, no? But be sure also that research and development costs are reasonable. And to make it reasonable, if you try to study about research and development in the tax code, there is threshold, no? Just like 3% of the total sales can be claimed as research and development cost. No? But more than that, it should be capitalized. Okay, development costs are capitalized only after technical and commercial feasibility of the asset for sale or use have been established. No? So you can capitalize only the development cost, no? Kung there is commercial feasibility of the asset. To complete the intangible assets and either use it or sell it and be able to demonstrate how the asset will generate future economic benefits. Remember that in transfer pricing, we're talking about financial and commercial transactions. And when we say financial and commercial transactions, we mean business. And in business, we mean income. No? We mean benefits. Because without it, then business will not operate. No, without profits, the business will not operate. You are just wasting your efforts, no, and your money. So there should be future economic benefits because without it, even intangibles, you will not recognize it as an intangibles if it fails to give future economic benefits. So if the entity cannot distinguish the research phase of the internal project to create intangible asset from development phase, the entity treats the expenditure for that project as if it were incurred in the research phase only. So hanggang research lang, no? Sa research phase of the internal project, no? Before the development phase. Okay. So in that case, how are you going to treat that? No? Because then it cannot be treated as an intangible. No? So initial recognition in process research and development acquired in a business combination. So this is it. No? How are you going to recognize the in process? It's not yet complete. No? But actually, for your information, at present, there are companies in order to avoid no, valuation of the intangibles that has been completed and it is very expensive to transfer later on that intangibles. What they're doing now is to transfer the incomplete, no, the in-process intangibles, transfer it to another company, no? That is what they're doing in order to sometimes save in the payment of taxes. No? Because if the intangible is not yet complete or is not yet finished, it is still in process, then it will command a cheaper price, no? Unlike that it is already complete and it is very expensive to transfer that intangibles. So the research and development project acquired in a business combination is recognized as an asset at cost. No? So at cost, even if a component is research. So subsequent expenditure, because we're talking of in process, so subsequent expenditure on that project is accounted for as any other research and development cost. expense except to the extent that the expenditure satisfies the criteria in IS 38. Okay? So if it does not satisfies the criteria of IS 38, then it can be charged to the expense. But of course, we have to be very careful also because especially here or in some other countries, the right to claim deductions or right to claim or charge your expenditure to expense account are also regulated. So you have to consult also the domestic law on the charging of that expense to your operating expenses. So for initial recognition, internally generated brands, masthead titles, and lists, no? They are internally generated, should not be recognized as an asset. Na? The IS-38 states that if they are internally generated, they should not be recognized as an asset. So, what does that mean? For the externally generated intangibles, then they can be recognized. Another recognition for computer software is if it is purchased, then you have to capitalize. No? For the operating system for hardware, it is included in hardware cost. No? For internally developed software, it is charged to expense, no, until technical feasibility, probable future benefits, intent and ability to use or sell the software, resources to complete the software, and ability to measure cost. No? Pag internally developed daw, expense mo. But if there is future benefits, then you have to value it another way. No? Amortization over useful life based on pattern of benefits. No? Straight line is the default. And for tax purposes also, only straight line method of depreciation or amortization is accepted. No? And that's why I told my clients to use only straight line method. So initial recognition, certain other defined type of cost. No? So this should be charged to expense for internally generated goodwill. No? We have example to that later. Startup, pre-opening and pre-operating cost, they are charged to expense. Training cost, advertising and promotional cost, including mail, other catalogs, and then the relocation cost. But see to it also that these are um, not so material that you want to charge it to operation or as an expense. Because if these are material account, very huge amount, then you will find problems now because that will be disallowed upon audit. So win in card means the entity receives the related goods or services. So that is the meaning of in card, no? If the entity has made prepayment for the above items, the prepayment is recognized as an asset until the entity receives the related goods or services. So prepaid, no? So prepayment is recognized as an asset. So initial measurement, measured at cost. Ayan, sabi ko sa inyo, cost for the default is at cost. No? Only the accounting standards used fair value sometimes, but for tax purposes, it is always at cost. Measurement subsequent to acquisition, cost model and revaluation model allowed. So these are the two models, no, for the revaluation, the cost model and the revaluation model. When we say cost model, of course, it is easy to measure because the cost is always stated in the transactions. For the revaluation models, of course, we have to use some standards or guidance on the revaluation. No? An entity must choose either the cost model or the revaluation model for its class of intangible assets. There are so many classes of intangible assets. In the previous time, the most popular intangibles that we know is goodwill. But for now, there are so many intangible assets aside from goodwill. No? So for the cost model, after initial recognition, intangible assets should be carried at cost, less accumulated amortization and impairment losses. And of course, if we have determined the cost, we have to determine also at the end of the year, no, one taxable year or one annual period, the impairment of that assets. No? And we have to recognize also impairment losses. Okay. So intangible can be carried at revalued amount, no? Less any subsequent amortization and impairment losses if fair value can be determined by reference to an active market. So how are you going to determine, no, the revaluation of these intangibles? No, you have to refer to the active market. And what is the active market? No, it is the open market. It is the buyer and the seller are free, no, to negotiate for the price of their goods. Such active markets are expected to be uncommon for intangible assets, but the handicap there is that it is uncommon for intangible assets because sometimes there is no open market for intangible assets. Imagine intangible assets are not physical assets and they are hard to measure. So there is really no active market for intangibles. Okay. Examples where they might exist, no? Where they might exist in the open market or active market. When there is production quotas, no? These production quotas are usually given or determined by the government and is given to a certain industry. No? Just like fishing, just like the sugar industry, the coffee industry, they have production quota. Fishing licenses, no? Taxi licenses. So these are example that there is active market, no, for these intangibles. Okay. So for revaluation model, revaluation increases recognized in other comprehensive income. No? So other comprehensive income, they are not sa operating expenses. And accumulated in the revaluation surplus. No? So it doesn't affect your written earnings. Within equity, except to the extent that they reverse or revaluation decrease previously recognized in profit and loss. That's why this revaluation surplus, this revaluation does not affect your taxable income. No? They only affect your written earnings. So the revaluation intangibles of finite life and is amortized, the revalued amount is amortized. No? So the revalued amount is amortized, meaning your original amount is 1 million. And then during the revaluation, the revalued amount is 2 million. So in that case, you are going to amortize now the revalued amount, which is 2 million, and not the original 1 million na amount. No? So that is what they mean, that you are going to amortize the revalued amount. Okay. Classification of intangible assets based on useful life. No? So how are you going to determine the useful life of the asset? No? So intangible assets are classified as indefinite life. No? Indefinite. No foreseeable limit to the period over which the asset is expected to generate net cash inflows for the entity. So indefinite, up to infinity, no limit, no end, no? Finite life, limited period of benefit to the entity. So for finite life, just like patent, no, 20 years lang yung our patent, and after which it will become off patent. So that is the finite life of patent. For copyrights, The copyrights will end 50 years after death of the owner, no? The composer. Okay. So, intangible assets with finite lives, cost less residual value of the intangible asset with a finite useful life should be amortized on a systematic basis over that life. So, in order that you will not have headache, yung amortization mo, use the straight line method only. No? So, the amortization method should reflect the pattern of benefits. No? If the pattern cannot be determined, then amortized by the straight line method. No, no headache, just use the straight line method. The amortization charge is recognized in profit or loss unless another IFRS requires that it be included in the cost of another asset. So try to look at the exemption that I detailed a while ago about the IFRS that governs those other accounts. No? The amortization period should be reviewed at least annually. Okay? So annually, and then you have to determine the impairment loss, no, of the assets. Okay. Future reductions in selling price could be indicative of a higher rate of consumption of the future economic benefits. No? May reduction in the selling prices. Standard contains rebuttable presumption. No? When it is rebuttable, then it can be challenged. That a revenue-based amortization method for intangible assets is inappropriate. No? And that is where the issues during audit comes up. No? Yung rebuttable presumption. No? Kaya how are you going to treat it that the tax authority will accept it? No? However, there are limited circumstances when the presumption can be overcome. So how are you going to overcome those presumptions in order to stand scrutiny during the audit? No? So the intangible asset is expressed as a measure of revenue. Measure of revenue ang intangible assets. No? It can be demonstrated that a revenue and the consumption of economic benefits of the intangible assets are highly correlated. Why? Because it ceases to be intangible if it has no economic benefits. So, it ceases to be intangibles. It just become intangibles because of the future economic benefits that it will bring to the company. Without the economic benefits, then it ceases to be an intangible asset. No? Revenue-based amortization may be appropriate. No? Okay. So, that is for your own readings. No? Okay. Let's go to measurement subsequent to acquisition, no? Before you acquire the intangible assets with indefinite useful lives. This is in the case of Amazon versus IRS, no? The determination there of the IRS of the assets transferred by Amazon to Amazon Ireland. No? So the intangible asset with an indefinite useful life should not be amortized. No? What are you going to do if the intangible assets has indefinite useful life and you cannot amortize it? You have to determine only the impairment loss. No? So it should be assessed for impairment only. And that is governed by another standard, which is IAS 36. So be careful about that because that will also be disclosed in the disclosure to financial statement. No? If you're going to assess the impairment in accordance with IAS 36, then you have to explain that in the disclosure or notes to financial statement. Okay? So for a subsequent expenditure, okay, so subsequent expenditure rarely meet the criteria for being recognized in the carrying amount of the assets. No? Rarely. There are only reasons why you are going to recognize that. Okay, so subsequent expenditure on brands, mastheads, publishing titles, customers list, similar items must always be recognized in profit or loss as incurred, no? So that's what the IAS 38.63 or paragraph 63 provide, no? For, and this is about subsequent expenditure, so do not confuse yourself. This is about subsequent expenditures that should be charged to expense. Okay. So accounting rules observed or followed by the intangible assets are different from that of the tangible assets, of course. So for accounting for intangible assets, it addresses the essential of the differences. No? So it's the study is about the different types of intangible assets, describes how to account for goodwill, including goodwill. You know. So we have later on how to amortize this goodwill. Okay. Okay. So that was the summary, and this is the uh, explanations, no? Here we have the past 38, and then the essential criteria, which is identifiability, control, and future economic benefits in order that the intangible assets can be recognized as intangible. No? And there is here the definition of identifiability and also the control and also uh, so those are the two criteria, identifiability and control, no? That you can recognize your intangible as what we have discussed already. These are some of the explanations, no? About the intangibles and also the future economic benefits that you can derive from that intangible assets. Otherwise, as I told you, they cannot be considered as intangibles. No? Okay. So for the recognition of intangible assets, it is probable that future economic benefits will flow to the entity and the cost can be measured reliably. So those are the two conditions. No? Otherwise, you cannot recognize the intangibles. No? For separate acquisition, cost of intangible assets can be measured reliably. So if the purchase consideration is in the form of cash or other monetary assets. So if the cost of intangible assets comprises of purchase price, import duties, if it is imported, and directly attributable cost of preparing the assets for the intended use. And this can be in the form of salaries of the consultants, of the employees, no? Can be freight, no? Or delivery. Okay. And then we have the costs which are not capitalizable, no? Cost of reducing new product or service, conducting business in new location, administration, other general overhead cost, and then cost while an asset capable of operating in a manner intended by man has yet to be brought to use. So, not yet operating. And the initial operating losses, no? So they are not capitalizable. Mm. So when they are not capitalizable, then they should be, they are not included in the cost of the intangible asset. Huh? Okay. Acquisition as part of business combination. Okay. Intangible assets can also be acquired when there is business combination. Why? Because of course intangible follows, or if it is owned by the company, then it is part of the assets being combined. Uh, So for the cost of the intangible assets, it is based on fair value, no, on the time of acquisition. So the intangible assets acquired in business combination is separable or arises from contractual or legal right. When there is business combination, of course, there should be some contracts or agreements signed by the companies under or pursuing that combination. No? So sufficient information exists to measure reliably the fair value of the asset. And usually, what are the references of the companies having business combination? Of course, the financial statements. No? That's why financial statements are very important, because those are the basis of valuation. What is being reported in the financial statement, except if that is misrepresented and that can be proven that there is misrepresentation in that financial statements. But of course, that financial statements without the presumption, no, the basic presumption is that it is the fair presentation of the result of operation, then it is always the basis of financial and commercial transactions and a point of reference in the valuation of assets. No? So it comes from the financial statements of the company. If there is an active market, the quoted price of the identical asset provides the most reliable evidence of fair value. So you have to benchmark on identical assets, no? If there is. Okay. Quoted price of similar asset in active market may also provide evidence of fair value. But that is very subjective, and you must be ready to prove. No? No active market, fair value of intangible is equal to available quoted price for identical or similar assets. No? So that's why in some cases, just like the shares of stocks, you can always refer to the quoted price, no, as published in the Stocks Exchange Commission. No? So fair value can also be based on an observable input developed by the entity using the best available information from the entity's own data. And sometimes this is very subjective and biased, no? If all the information coming from the internal data of the company. But of course, if that is fully documented and sometimes they are also given value by the assessor, no? So example, the fair value can be determined by discounting the estimated future net cash flows from the intangible assets. That can be one basis, no, the net cash flows from intangible assets. Because we are talking always about future economic benefits. And what are those future economic benefits? Those are the cash flows that the intangible will generate for the company. Okay. Example, another is the acquisition by government grant. No? So intangible asset acquired by way of government grant is free of charge or for nominal consideration. But in some cases, it is being paid, just like halimbawa LTO franchise, you're going to pay that. No? So when the government transfer or allocates an entity intangible assets such as airport and land rights, no? Licenses to operate radio or television stations, these are being paid, no? They are not free. Import licenses or quotas or rights to access restricted resources. Those are examples of government grants. No? So intangible asset by way of government grant may be initially recorded at, can be under fair value or nominal amount or zero plus any expenditure that is directly attributable to preparing assets for its intended use. Okay. Another is acquisition by exchange. One or more intangible assets may be acquired in exchange for non-monetary assets. Pwede, no? Or a combination of monetary asset and non-monetary assets. Okay. So measure also at fair value unless the exchange transaction lacks commercial substance or fair value of neither the asset given up nor the asset received is reliably measurable. That's why, for me, this is already the work of the accountant, no? Especially the valuation. I don't know if you are going to consult with other expert. Maybe industry expert. You can also consult industry expert, especially if the intangible involves very unique to the industry. No? So if the exchange transaction lacks commercial substance, the acquired intangible asset is not measured at fair value, but the cost is the carrying amount of the asset given up, no? Why? What do you say that the transaction lacks commercial substance? There is no business reason, no? That is what we call in transfer pricing as it lacks substance, no? Because if it lacks commercial substance, then it is not arm's length. And when it is not arm's length, what is here provided? The cost is the carrying amount of the asset given up and not at fair value. No? So how much is the cost of the asset given up? That is the cost or value of intangibles. Exchange transaction lacks commercial substance when the cash flows of the asset received do not differ significantly from the cash flow of the asset transferred. No? So, wala siyang commercial substance. Okay. Internally generated intangibles assets. So, these are assets or intangibles generated by the company. Comprises all directly attributable costs necessary to create, produce, prepare the asset to be capable of operating it in the manner intended by management. No? So internally generated intangible assets, they are generated by the company and usually through research and development. Examples: cost of materials and services used or consumed in generating the intangible assets. Cost of employee benefits, fees to register a legal right, no? Just like registration of the inventor of his work, no? In the where it is in the IPO, no? So fees to register a legal right. And then amortization of patents and licenses used to generate the intangible assets. So these patents are step-by-step processes, no? And they are registered, the patents, no? And these registered patents are licensed, no? So they are used to generate intangible assets. Then you have to pay, no? Or amortize those expenses. Okay. So these are not included sa internally generated intangible assets. The selling, administrative, general overhead. No? Clearly identified inefficiencies, initial operating losses, expenditure on training staff to operate the assets. No? They are not components of the cost. Okay. Okay. No, please read some of the slides that we have, no, because that is intended for your readings. Okay, so we have discussed the recognition as an expense. Let's move forward. No? Okay, for the subsequent expenditure, we have discussed that also. That is more specific here. No? So identifiable intangible assets. Slide 73, Hari. Okay. So identifiable intangible assets acquired through purchase. There is transfer of right that would make the asset identifiable. No? So, because there are some cases that there are unidentifiable intangible assets, no? Okay. If assets could be sold, transferred, licensed, rented, or sold separately, then that intangible asset is identifiable, no? So those are the criteria. Unidentifiable asset cannot be sold, transferred, licensed, rented, or exchanged. So it is the opposite of identifiable assets. And example is goodwill. Why? Because you cannot sell goodwill without selling the company, no? Because it is incorporated in the company. Okay, so measurement after recognition can be cost model or revaluation model. No? Okay. And our rule on intangible that can be carried at revalued amount only if there is an active market for the asset. If not, you are going to value only the intangible asset at cost. No? So fair value, the rule for fair value is there is an active market. If there is none, then you can value only the cost, no, of the intangible. How about amortization? In paragraph 97 of the IS 38, intangible assets with limited or finite life are amortized. Why? Because the intangibles which has an indefinite life cannot be amortized, no? They can only be revalued for impairment, no? So paragraph 107 and 108, intangible assets with indefinite life are not amortized but are tested for impairment at least annually and when there is indication that the intangible assets may be impaired, no? So they can be tested for impairment annually. If none, then you cannot amortize. Impairment loss on intangible asset recognized if the recoverable amount is less than carrying amount. No? Let's go to the definition of amortization. Systematic allocation of amortizable amount of the intangible asset over the useful life. Because you cannot amortize all intangible assets. There are assets also that cannot be amortized. And what is the example? The one which has indefinite life. No? So for goodwill, when you acquire the company together with the goodwill, is the goodwill finite life or indefinite life? No? So you cannot amortize it. The amortization is recorded by debiting the amortization expense and crediting the intangible asset account. We have a sample, but we have very limited time. That's why try to read some of the uh, slides that we have. Harip, those who are present, pinadalhan mo na lahat. Okay. Sige. And then we have the useful life. No? What are the factors affecting useful life of the asset? No? For for excuse me. For intangibles like software, they can be affected by technological, commercial, or other type of obsolescence. So they become obsolete. And when these intangibles become obsolete, they have no value anymore. No? So expected action by competitors or potential competitors. Example, you are developing antivirus, no? Then you are selling it to the market, and then your competitor was able to produce the antivirus, which is more powerful than you have developed. So this is an example of the action by competitors or potential competitors that makes your antivirus obsolete. No? Expected usage of the asset by the entity. So, if the expected usage of the asset by the entity affects the life, the usefulness of the assets, then it shorten sometimes the life of the assets. Typical product life cycle for the asset. Sometimes there are product life cycle that shorten also the life of the asset. And stability of the industry in which the assets operates. No? So if the industry is very volatile, no? So it makes the asset also um, not useful or becoming obsolete. So what are the kind of industry that are very volatile now during the pandemic? This resorts, no, transportation, they are not operating well, no, they are affected by the pandemic. So level of maintenance expenditure required to obtain the expected future economic benefits from the asset. Useful life of the asset may be dependent on useful life of other assets of the entity. No? Sometimes it cannot stand alone. It is dependent on some other assets of the entity. And we will discuss that this afternoon. No? Period of control over the asset and legal or similar limits on the use of the assets, such as expiry dates of related leases. No? For leases, they are under contracts, and that contract has a term. No? So when that contracts are expires, the date of the contract expires, then that the assets also expires, no? Especially if it generates intangibles. Amortization method, as I told you, you use the straight line method shall be used. No? Residual value. Okay. Residual value presumed to be zero. So intangible assets has no residual value except when a third party is committed to buy the intangible asset at the end of the useful life. So remember, intangible assets has no residual value except there are exceptions. No? So kung may third party willing to buy intangible asset at the end of the useful life. Also, when there is an active market, so that expected residual value can be measured and probable that there will be a market for the asset at the end of the useful life. So still sellable at the end of its market life. So may residual value siya. Okay, residual value is reviewed at its financial year end. No? Why? In order to value the assets properly or correctly. Change in the residual value is accounted for as a change in accounting estimate. No? So yan the residual value, change in residual value of the intangibles accounted for as a change in accounting estimate. So the residual value of intangible may increase to amount equal to or greater than the carrying amount. So depende. Depende. No? So you justify at saka there should be an analysis for that. That's why accountants, for me, accountants, the work of the accountants is more on analysis. No? Because these standards are only standards that we are going to follow. But of course, when you apply it, it requires a lot of analysis. No? Because sometimes the application is wrong. No? So change in amortization method and useful life. Okay, so amortization method and useful life of intangible assets shall be reviewed at its financial year end. No? So yun yung useful life na intangible assets. So if the expected useful life of the intangible assets is significantly different from previous estimate, then the amortization period shall be changed accordingly. Of course, but you have to disclose that. Just like this, these are potential notes to financial statement disclosure. If you change the expected useful life of the intangible assets, you have to disclose that in your financial statements and the reason. Okay. Significant change in expected pattern of economic benefits from the asset shall be changed to reflect the new pattern. No? Okay, so accounted for as change in accounting estimates. derecognition of an intangible asset. So how are you going to derecognize the intangible assets in your balance sheet, especially if you value it for a huge amount, no? So, and then you are going to derecognize it. Or eliminated from the statement of financial position. So there's so much um, reason, no, for that derecognition. And one of which is the disposal of the asset. Of course, uh, if you dispose the asset, there must be some consideration, and you're going to disclose that also. We know future economic benefits are expected from its use, so you just write it off, no? So written off. So there must be a reason for that. Gains and losses arising from the recognition of the intangible asset shall be determined as difference between net disposal process and carrying amount of the asset. No? So for the gains and losses. Also, the recognition gain shall not be included in revenue but treated as other income. And of course, if it is treated as other income, it is still taxable, no? Because that is a gain. It is a taxable gain. Okay, identifiable intangible assets, no? These are the examples. We have the copyrights, no? So you study the meaning, no, of the copyright. We have the cost of the copyright, no? Expenses incurred in the production of the work. And then we have the amortization of copyright. So these are the accounting standards for the um, recognition of the copyrights. Cost of copyright shall be amortized over the useful life. No? Useful life is the period in which benefits, sales, and royalties are expected. No? And difficult to estimate the number of years in which benefits will be received. Because sometimes the benefits of the copyright is earned only on the first 2 to 5 years. No? After that, it ceases. But copyright existed 50 years after death of the author or composer. No? So it is advisable to write off the cost of copyright against revenue of the first printing. Okay? So sa intellectual property code natin, the copyright is protected during the life of the author and 50 years after death. So acquired copyright, cost. No? Cost paid plus directly attributable cost. No? Internally generated copyright, acquired copyright should be amortized over the useful life. Okay. How about franchise? Oh, franchise agreement, no? Franchisor and franchisee, no? Can be between private entity or individual or between private entities or individual, no? So, right to use. Examples between government. Use of public water for inter-island shipping. Use of public land for telephone and electric lines. Use of streets and highways for bus line. And then we have the franchise between private entities. No? Can be franchise to use trademark, patent, and processes of the franchisor. So these are owned by private individual. And they can be acquired through licensing, no, or contract between the franchisor and the franchisee. Franchise cost, lump sum payment for the acquisition of the franchise. No? We have example on how to record that in the books. And then the lump sum payment. So we can amortization of the franchise over the finite period, which is shorter. Because grant of franchise, there is always a contract, no? And term, so it follows. The amortization follows the term of the contract. Okay. So for the franchise accounting, we have how to record the payment in the book of the franchisee. No, for the franchisor, we will not discuss it here. No, so the franchise fee expenses and credit cash. No, that is the payment of the periodic franchise fee, which is 5% of the gross sales, no, during the current year. So franchise fee expenses, credit cash. And then for the initial franchise fee, this is the lump sum amount, no? Uh, example, no? Franchise of 5 million for 20 years, no? So initial franchise fee is payable in cash, 500,000, and then the balance is 5 equal installment every year end, no? Evidenced by a 12% promissory note. So, in the book of the franchisee, we are going to record the franchise of 5 million and then credit cash na 500,000 and then notes payable of 4,500,000. No? So, to record the payment of the first installment, we have the notes payable 900,000 and then the interest expense 540,000, and we have to credit cash of 1,440,000. Why the note payable is 900,000? Because the note payable is 4,500,000 divided by 5 years. No? Okay. And amortization of franchise is 250,000, which is 5 million divided by 20 years. So you are going to amortize the term of the franchise of 20 years. So the lump sum amount is 5 million, so divided by it by 20 years. So your amortization is 250,000. That is for the amortization. But for this franchise, you are going to expense the franchise expense of 250,000, also 5% of 5 million, and also the amortization of franchise on the lump sum payment. No? So you have two expenses. Okay, another franchise acquired is 5 million for McDonald Company. No? So outright payment is 5 million, and then initial franchise fee is payable in cash, 500,000, and then the franchisee could borrow money at 12% and the present value of ordinary annuity of 1 at 12% for 5 periods is 3.60 0.6048. So that's the factor. So present value of 5 payments of 900,000 would be 900,000 times 3.6048 or 3,244,320. So they recognize or compute the present value. Okay. Okay. So how are you going to record that in the books of the franchisee? So you have to debit franchise 3,744,320. The discount on notes payable is 1,255,680. And then you have to credit cash 500,000, credit notes payable 4,500,000. For the down payment, we have 500,000 and the present value of note payable multiplied by the factors is 3,244,320. So total cost of the franchise is 3,744,320. Of course, because there is a down payment cash of 500,000. So that the notes payable is only 4,500,000, and going through the present value of the note payable using that factor, we have the implied interest of 1,255,680, and that is being recorded. Those amounts are recorded in the books of the franchisee, and that is the computation. No? So to record amortization, we have the amortization of franchise 187,216, credit franchise, and how we compute that, the 3.7 million divided by 20 years. No? So to record the first installment, notes payable, 900,000, credit cash 900,000. To amortize the discount on notes payable, debit interest expense 389,320. 318, and then discount on notes payable, 389, 318. So that is the record on the books of the franchisee, no? As I told you, the books of the um, franchisor is not discussed here. So for the schedule of the interest and principal payment, we have there the date, the payment, the interest, and the principal, and the present value. So that we arrive at the amount that is being recorded in the books. So the computation of interest is 3,244,324, 2017 times 12%. So that's why we have 318. Excuse me. And in 2018, we have 328,037. So that those are the explanations why we arrive on that amount. Excuse me, Hari, patayin mo muna. Excuse me. Excuse me. And in 2018, okay, so list rights. These are example, no? We will not discuss everything here, but that is for your own reference, no? Because we have example of the account, and then it's the same with other accounts. So we have renewal option, we have broadcasting license with indefinite useful life. So indefinite useful life cannot be amortized, but only for impairment, no? So that broadcasting license, depending on the term also. Broadcasting license with finite useful life, no? We have airline right, we have customer list, no? And that is governed by paragraphs 63, no? We have organization cost. We have website development cost. Okay. So, identifiable intangible assets, which are patents and trademark, no? So, for identifiable intangible assets, we have patent, trademark, copyright, franchise, license, customer list, and then computer software. No? For the cost of the patent, If the patent is acquired, then the cost comprised of purchase price, import duties, non-refundable purchase taxes, no? Because the purchase taxes are collected in advance by the customs, and attributable cost of preparing the asset for the intended use. Okay. Okay. Okay, so same rules or same standard, no? For the cost of the litigation, we have the legal fees, other cost of successfully prosecuting or defending a patent shall be expended. Cost of litigation for patent, no? We have the amortization of patent over the legal life or useful life, whichever is shorter. So if the legal life in the contract is 10 years, but the patent is for 20 years, then whichever is shorter. No? The amortization period is 10 years, as it is in the contract. Okay? So acquired patent, from original patentee, the cost shall be amortized over remaining life or useful life, whichever is shorter. Okay. So for the illustration, please try to, that is for you. I researched that, but as I told you, we have a very, very short time, no? That I cannot explain everything to you. But anyway, I designed my slides that when you read it on your own, it is very self-explanatory that you can understand it. No? It is not the same as the slides of other speakers that once you are alone, you cannot understand. No? For this purpose, I see to it that the slides that I make can be understood by the uh, participants. No? Okay. So these are the journal entries for patent, no? Kanina franchise. No, these are the example. To record the development of the patent, we debit research and development expense. So in this case, the research and development are expense, no? And then we credit cash of 200,000. To record the cost of licensing of the patent, we debit patent 120,000 and then we credit cash 120,000. So to record the amortization of the patent, how are you going to compute the amortization of patent? 120,000 over 20 years, no? So that is 6,000. So amortization of patent is 6,000, and then you have to credit the intangible assets, which is patent, 6,000, no? Also, same for 2017 and for 2018, the amortization. No? And later, for the disclosure in the financial statement, you are going to disclose these amounts in your notes to financial statement. No? Just like example, amortization of patent for 2018, in your disclosure, you have to discuss the 6,000 as the amount of amortization from your acquired patent. And then we have the legal expenses for the patent, outright expense. So legal expenses, 180,000, credit cash, no? 180,000. Amortization of patent for 2019, same amount, 6,000, because we are using the straight line method. To record the acquisition of competing patent on January 1, 2020, no? So debit patent, 170,000, and then credit cash, 170,000. This is acquisition of patent. To record amortization of patent for 2020, why amortization of patent is higher now? Because there is another patent that have been acquired. No? So amortization of patent 16,000, credit patent of 16,000. No, your patent now in your balance sheet, the amount is 16,000, no? The total. Because you have the original patent, 6,000, and then the competing patent of 10,000. That is for the amortization. But as to the amount, the competing patent is 170,000, no? Okay. And then writing off the patent account on December 31. Patent written off 256,000, credit patent 256,000. So the patent written off is classified as other expense. No? But try to consult the rule on tax deductions because especially if this is written off, this should have some approval with the BIR before you can claim that as an expense, no? The patent written off. Okay. The patent and the account form will be shown as follows. So for the patent, we have the original cost 120,000, and then we have the cost of competing patent 170,000. So we have total 290,000. So amortization 2017, 18, 19 of 6,000, and for 2020 16,000. So the remaining amount to be written off is 256,000 for the patent, no? Because it was written off noong 2020, no? It might be that the reason is obsolescence or it has no commercial value for the intangibles. Okay, so impairment of patent. Since a patent is an intangible asset with finite useful life, the cost is amortized. However, the patent should be tested for impairment whenever there is an indication of impairment at the end of the reporting period. So impaired na, that's why you have to write it off. No? Okay. So this is the another example. No? So January 1, 2017, the entity acquired patent for 2,400,000. The useful life is 10 years and the legal life is 12 years. And what is the rule? Whichever is shorter. No? So December 31, there is indication the patent may be impaired. No? So patent expected to generate cash flows of 300,000 as against your acquisition 2,400,000, but that 300,000 per year for 9 years, no? So 2.7 million. Okay. So to record the patent acquisition, debit patent, credit cash. To record amortization, debit amortization of patent, credit patent. Okay. Impairment loss. Debit impairment loss 360,000, credit patent 360,000, no? So carrying amount of as of December 2017, 2,400,000 minus 240,000 is 2,160,000. Present value of cash flows is 300,000 times 6 years, no? Na lang. Is 1,800,000. So that the impairment loss in this case is only 360,000. Okay? So you will not right away impaired or declared a loss the whole amount. You have to compute also the cash flows, no? That it will bring to the company. In this case, there is a sales of 300,000, no? So to record the patent amortization, amortization of patent for 2018, 200,000, and then patent 200,000 credit, no? Next is we have the trademark, no? So trademark, the sign or symbol, same lang, the recording is the same, no? So amortization of trademark, no? So we have the illustration there. And then we have the also trademark with finite useful life. and impairment of trademark. So same with other intangibles. Okay, we have also the example there and also the journal entries. Goodwill, no, this is the most unique asset presented in the financial statements. And usually, as I told you, there was a case in transfer pricing that they depreciate the goodwill for 16 years and in a very huge amount, but that was disallowed by the tax authority, and the taxpayer were required to pay deficiency taxes. No, so how that happened? Goodwill is referred to as the most intangible of all intangibles. In fact, during my time, no, when I became a CPA, when I was still a student, the only intangibles that we know at that time is goodwill, no, or other accounts or other kind of good of intangibles are not recognized at the time. Only goodwill. So goodwill is unique in the sense that goodwill standing alone cannot be bought and sold. Why? Because you cannot sell goodwill. No? It is incorporated in the company. Without the company, then there is no goodwill. Okay. The goodwill can only be identified with the entity as a whole. No? So it cannot be separated. It is an intangible asset, not specifically identifiable. So what are the criteria of the intangible that we have? Should be identifiable. And in this case, goodwill is not identifiable. It has an indeterminate life. No, it depends on the life also of the entity. Is inherent in a continuing business and relates to the entity as a whole. No? So the goodwill cannot be separated from the entity. Okay. Goodwill arises when earnings exceed normal earnings by reason of good name, capable staff and personnel, high credit standing, reputation for fair dealings, reputation for superior products, favorable location, and a list of regular customers. So that goodwill are developed. Goodwill is created by a good relationship between an entity and its customers. No? So by building up a reputation by word of mouth for high quality products or high standard of service. No? Can also be built by responding promptly and helpfully to queries and complaints of customers. And also through personality of the staff and their attitude to the customers. Goodwill changes from day to day. No? Goodwill is continually changing. No? One act of bad customer relations might damage goodwill, and one act of good relations might improve goodwill. No? So it has an effect. So how do we recognize goodwill? Between developed goodwill and purchased goodwill. So we have to distinguish, no? So what are developed goodwill and what are purchased goodwill? Okay. So from the word itself, purchased goodwill are acquired through purchase, no? No? Uh, developed goodwill or internal goodwill is generated internally. No? So yun yung mga examples. Homegrown goodwill is not recorded. No? Kasi self-serving. Okay. Goodwill may prove to be difficult and a great deal of subjectivity and misrepresentation might occur. No? So, past 38, paragraph 48, internally generated goodwill shall not be recognized as an asset. No? Kasi subjective nga. Only purchased goodwill that has been paid for. Okay? You acquired the asset, so you have paid for it. No? Measurement of goodwill, purchaser and seller to agree upon in fixing the purchase price of the business. Okay. The residual approach and the direct approach. There are two methods. No? So for the residual approach, goodwill is measured by comparing the purchase price for the entity with the net tangible and identifiable assets. Okay. We have examples. And then we have illustration. No? So the entity purchased business for 9 million cash. Assets and liabilities of the acquired business measured at fair value are the following, no? So you have the cash, the accounts receivable, inventory, property, plant and equipment, and patent. So the total assets is 9.8 million. And then the liabilities are um, 2,800,000, so that the net assets at fair value of the company is 7 million. So the purchase price is 9 million, the net assets acquired is 7 million, so there is goodwill of 2 million. No? So it is easy to measure in this case because the goodwill is acquired. No? But for internally developed goodwill, the standard says that it should not be recognized. So for the journal entry to record the purchase, we have debit cash, debit accounts receivable, inventory, property, plant and equipment, patent, and we also debit the goodwill. No? For the credit, we have the accounts payable, notes payable, accrued liabilities, and the cash of 9 million. No? Okay. So that is the journal entry to record the purchase. For the direct approach, we have the future earnings of the entity. No? So value the anticipated excess earnings, which are the essential component of goodwill. And this is, as I told you, in the section 482 of the transfer pricing guideline of US, that the intangible should commensurate, the valuation of intangible should commensurate with the income approach. No? That's why, because of that addition to the section of their transfer pricing law, those previous cases lost in the court, if being litigated now, will be in favor of the IRS. Okay. So illustration of the direct approach, we have the net assets excluding goodwill, 7,600,000. And then the normal rate of return of the industry is 12%. Okay. So for the example for past earnings for 5 years preceding the sale, no? So 2013 to 2017. Oh, so the goodwill is 100,000 times 5. Okay, so 500,000. And then next, capitalization of average excess earnings. Average excess earnings is 100,000. So divide by capitalization rate of 25%. So the valuation under the capitalization of average excess earnings of goodwill is 400,000. No? So capitalization of average earnings, method 3. Measured at average earnings capitalized at 10%. Kanina, 12%. So average earnings is 1 million. Capitalization rate, 10%. No? Net assets including goodwill or purchase price is 10 million. Net assets excluding goodwill, 7,500,000. So that the value of goodwill is 2,500,000. And then we have the present value method. No? Okay. So, how do we compute the present value method? The average excess earnings multiplied by the present value of the ordinary annuity for 5 years at 12%. So, we have the goodwill of 360,500. No? Okay, so goodwill in a business combination. No? So, we have here the formula for your guide. That is the formula in a business combination. No? So you have to consideration transferred, the amount of non-controlling interest on the acquired assets, and then fair value of previously held interest in the acquired business, and then total. Then we have to net amount of identifiable assets and liabilities assumed at fair value. This is disclosed, no? And then we have goodwill. Well, the subject matter of goodwill acquired in a business is taken up in an advanced accounting course. So, hindi natin na-discuss dito. But in this case, this is the formula for the goodwill in business combination. No? And then we have negative goodwill. So what are the negative goodwill? When the assets that we purchase is more than the cash that we paid. No? So this is the illustration of the negative goodwill. No? The net assets at the fair value is 9 million. The purchase price is 8 million. So that the net assets acquired is 9 million. So we have negative goodwill of 1 million. So in this case, gain. Although it is classified as negative goodwill, but the effect for the company who purchase is positive. No? So the acquisition is recorded as follows. So we have to debit cash, accounts receivable, inventory, loan, and then property and equipment. Land, that is land. And then we have the credit, the accounts payable, bonds, cash, gains on bargain purchase, no? 1 million. Okay. Impairment of goodwill. No? So, it shall not be amortized because the useful life is indefinite. No? That's why I was confused, or I was thinking that why is it that the accountant of that very big company depreciate goodwill when in fact we have our accounting standards that since goodwill is indefinite, it cannot be amortized. What's more depreciated? So goodwill shall be tested for impairment at least annually. Okay? Goodwill shall be tested for impairment at the operating segment level or any lower level of the company. No? So that is very, very specific. So, since it's already time, no? So I would like to say thank you for those who attended this seminar and see you at 2 o'clock in the afternoon. No? So what we got today, we have identified what are the example of intangibles and how do we recognize some of the intangibles. No? Because why some of the intangibles? Because there are so many intangibles, and we have discussed only some of them. How we recognize them, how we value them, and how do we depreciate them or amortize them, and how do we record them in the books of accounts. No? So those are the accounting standards under IS 38 that we follow, and the recognition and valuation of intangibles. No? But of course, our study is very limited because we only have 2 hours. No? For your sake, you may expand your knowledge and then you research more, you read more about intangibles. No? So this afternoon we will be discussing on intangibles and of course the presentation in the financial statements. Okay, so with that I would like to say thank you and see you at 2 o'clock. Okay, good afternoon, everyone, and welcome to our second topic this afternoon. We have attendees on this free webinar on the presentation of intangibles in the financial statements. We have Bascones Flordeleza from Davao City, Abad Annabel from Nueva Ecija, San Antonio. We have Nartatis Sai Sibel, Calamba City. Oo, si Julian, Prinsipe, no? Prinsipe Julian, Tatalon, Quezon City. Nicanor Mariela, Lapu-Lapu City. Lapu-Lapu Street, no? Novaliches, Quezon City. May Lapu-Lapu din pala dyan. Mitabuena Cecilia, Calamba City. Monforte Antoinette, Legazpi City. Ilizaga Madeline Barlongo, Natividad, Pangasinan. We have Reynalyn Devero, Muntinlupa City. Sir Ray Formoso from Antipolo, as always. Merly Lumbang from Angeles City. Si Ma'am Lilian Yao nandito na, no? From Tondo, Manila. We have Maria Sin de la Mayo from Laguna. And we have Wianito Muhammad Akbar from Indonesia. And we have Corpus Justine Nicole from Caloocan City. Okay, so these are the, so far the participants who have registered, no? And attended on this afternoon seminar. So we'll continue with our discussion on the presentation of intangibles in the financial statements. Once you recognize and value the intangibles in your business, then since intangibles are considered as assets, you are going to present it as part of your balance sheet or in your financial statements. If you claim for amortization, then you have to charge it in your financial statement through the income statement, no, as part of the operating or administrative expenses. Okay. So intangible assets, as what we learned in the morning, are non-physical assets with multi-period useful life. And what are the two kinds of useful life of these intangibles, the finite and indefinite, no? So examples are patents, copyrights, customer list, literary works, trademarks, broadcast rights, no? So they should appear in the balance sheet. But for your information, I happen to review so many financial statements of the company, big companies at that, but they failed to uh, report their intangible assets in the financial statements. And what happened or what is the effect if you fail to report your financial assets, uh, intangible assets in your financial statement? Then your financial statements are misrepresented. Also, that is the effect. And I don't know, because I was so worried during the last time that the filing season for the income tax return, and all those financial companies that I audited and for financial statement purposes, I require them to report intangible assets. And this afternoon, aside from discussing to you the presentation in the financial statement of the intangible assets, we will identify, no, based on several authors, based on several publications, we will identify what are the intangible assets. Oh, because some companies will say that, no, we have no intangible assets. That's why we are going to identify what are the intangible assets, because in that case, we will know what to report in our financial statements. So what are the disclosures related to intangible assets? These are the example or the requirements for intangible assets that you are going to disclose. So number one is whether useful lives are indefinite or finite. And if finite, the useful lives or the amortization rate. So when you identify the intangible assets and you know the life, then when what is the rule for indefinite assets? The indefinite assets or the intangible assets with indefinite life are not to be amortized but tested only for impairment on an annual basis. How about the finite? No? If finite, the useful lives, you're going to amortize, no? And then explain or disclose the life of the assets. Example is patent. Patent, if protected or registered, the patent is registered or protected only by the IPO for 20 years, after which it will become off patent. So what is the useful lives of the patent? Whichever is shorter. Because even if it is protected, your patent is protected for 20 years, but the useful value of the patent is only 5 years, then whichever is shorter. So for the cost of that patent, you're going to amortize it only for 5 years, or whichever is shorter, and not the 20 years as registered in the Bureau of Patent. No? The second item that you are going to disclose is the amortization method. And I told you the default is you are going to use the straight line method of amortization. But if there is a pattern, or you know the amortization method that differs from the straight line method, then you can always do so. But you, of course, you have to give reason why you are using that kind of depreciation method, because the default method, according to the standard, is the straight line method. And also, the BIR, or our tax authority here in the Philippines, I don't know, in Indonesia, uses only the straight line method when it comes to computing the taxable income. Because this amortization amount is deductible as operating expenses in order to arrive at the taxable income. So you have the benefit of deducting from your operating margin the amount of the amortization intended for your intangible assets. So the gross carrying amount and any accumulated amortization aggregated with accumulated impairment losses at the beginning and end of the period. So this is another disclosure requirement. No? Gross carrying amount and any accumulated amortization aggregated. I give you the example in the journal entries on the franchise and also the patent. No? The example, that's why you are going to disclose that. It's hard for you to disclose the intangible assets if you fail to record it in your books of accounts. That's why it's very important, and that's why I always offer these free bookkeeping seminars for taxpayers, because for me, the heart of tax compliance is in bookkeeping. And even here in the reporting of these intangible assets, it is very, very important that you record this also in your books of accounts, because once you prepare your financial statements and you are going to disclose the information about your intangibles, then it is not difficult for you to disclose the necessary information, because it is recorded in your books of accounts and you can always refer to your books of accounts. But the problem is, if you fail to record this in your books of accounts and then the intangible assets is unaccounted for, then it's really a big misrepresentation when it comes to presentation of financial statements, because you fail to record or present this in your financial statements. No? And I have reviewed, as I told you, I have reviewed so many financial statements, very big companies at that, with system, no, in their service providers using internet connections, using software in their delivery of services, but they failed to recognize that in their financial statements. Good for you if you will not be audited, and good for you if there are no transfer pricing issues that will crop up during your audit, and that affects the intangibles. And that's why I worry because during the presentation or the filing of the financial statements that I used to audit, I was worried because I told them, if you will be subjected to a transfer pricing audit or even to the regular audit, what happens if the issues that will crop up are about intangibles and you fail to disclose intangibles in your financial statements? uh, Based on the cases, based on the jurisprudence, no, that I read in cases involving taxation, you are already at a loss. No? When you fail to disclose the issue that is the source of the dispute, is not recorded or accounted for in your financial statements and in your books of accounts, then the court always give a verdict or decision against you, no? But there are cases also that the taxpayer would make some tax-saving devices, but all the sales, all the expenses, all the transactions, commercial and financial transactions, were properly accounted for and reported in the financial statements and books of accounts. In that case, the tax authority or the court favors the taxpayer. Why? One of the reasons why the tax court favor the taxpayer is because all the transactions are properly recorded and properly accounted for. So in the case that intangibles source of issues or findings in the tax audit, and then there is no intangible in your financial statement, then if the case reaches the court, then it will be uh, decided against the taxpayer and in favor of the tax authority. So that's why very important the disclosures in the financial statements, because it means you properly accounted for that particular transactions. Okay, so gross carrying amount and accumulated depreciation. The gross carrying amount is the amount of intangibles that you reported in your balance sheet, and also the accumulated amortization. Accumulated amortization are the amortization of that particular intangible assets that you already claimed, no? The total. So that was aggregated and accumulated. Also, the accumulated impairment losses. Why? Because you are required, especially if the intangibles are indefinite, then there is no amortization, but only the reporting of the impairment losses, no? At the beginning and end of the period. What is the beginning of the period? The audit that we have is for an annual basis, no? So beginning is January if you are a calendar year, and ending in December. But if you are a fiscal year, then any month excluding January, no, is the beginning, and the ending is any month excluding December. Okay, so another disclosure requirement is the line item in the income statement in which any amortization of intangible assets is included, no? So there are line items in the income statement, and what are the example of that line item? Can be amortization of property, plant, and equipment, where your amortization of intangible assets are included, no? I try to look at the financial statement of so many companies. I try to look at their property, plant, and equipment in the hope that some of the intangible assets are reported or included there, but it's none, no? There's none. That's why the financial statement are misrepresented, no? When you try to look at the financial statement and you know that there are vital information or material information that has not been reported in that financial statement, then that financial statement is misrepresented. Because it has no value. Why? Because it's not the proper amount reflected in the balances. So next, disclosure is the addition separately showing those internally generated, those acquired separately, and those acquired through business combinations. No? Example, if the company make business combinations through business restructuring, no? And then acquired business, just like what I told you in one case, wherein the taxpayers, a group of taxpayers, a group of companies, make their structure complicated from one business reorganization to another, and then they were able to accumulate a very huge amount of goodwill. After that, that goodwill has been depreciated for, I think, 16 years. No? And the tax authority disallowed it. Why? Because goodwill has indefinite life. No? So what the standard IS 38 said, this goodwill with indefinite life are not to be amortized, no? Much more depreciated. So those acquired through business combination, so you have to report that or disclose that this amount was acquired through business combinations. Also, those internally generated. When we say those internally generated, what are those kind of intangibles internally generated? Later, we have so many examples, but one of the examples of intangibles internally generated are the result of research and development. No? That's why research and development are very important. And in fact, in some countries, research and development are a major expense to the company. But of course, even if that is a major expense of the company, there is usually a threshold on the amount to be claimed as outright expense. No? Most of the time, if the amount for incurred for the research and development is a huge amount, then it should be amortized. So what are those internally generated intangibles? We will discuss that later on. I will give you some examples. Disclosures, intangible assets classified as held for sale in accordance with PFRS 5. I try to look at the PFRS 5 requirements, and PFRS 5 standard is the non-current assets held for sale, no? And on discontinued operations, no? So that is for disposal or distribution to owner. So that is in PFRS 5. In general terms, assets held for sale are not depreciated. No? Because if you try to look at the financial statements, usually in the balance sheet, so what are those property, plant, and equipment as against those under the inventory, no? So under the current assets, there are inventories. So inventories are held for sale. So if you have land and that is held for sale, then you want to depreciate that. Why? It becomes an ordinary asset. No? If it forms part of your inventory, you cannot claim depreciation for that. You can claim depreciation only if your assets are classified under the property, plant, and equipment. You can claim depreciation, but if that is held for sale, then no depreciation is allowed for you to claim. No? So they are not to be depreciated and are measured at the lower of carrying amount and fair value, less cost to sell. So that is for inventory. They are classified as inventory. and are presented separately in the statement of financial position. So they're also disclosed in the financial statement separately. Specific disclosure are also required for discontinued operations and disposal of non-current assets. Also, that is the requirement of PFRS 5. No? So, next disclosure, number 7, is increases and decreases in intangible assets resulting from revaluation. Why revaluation? Because we have the cost method and the revaluation method. No? So, this revaluation of the intangible assets sometimes result to increase or decrease in its value. So if that happens, we're going to report that in the financial statement through notes to financial statements. No? So we have to disclose that or explain that in the financial statements. And then next, disclosure requirement is number 8, impairment losses and reversal of impairment losses. Why? Especially those who are indefinite, no, or intangible assets with no finite life, so indefinite siya. You cannot limit the existence of that intangible assets. So you cannot amortize that. No, you cannot amortize that for its indefinite life, but you can always test it for impairment. And any impairment losses or should be recognized, no? On the value of the intangible assets. So that impairment losses can be deducted, and when there is gain, when there is increase in intangible assets, then it should also be reported. Another is the net exchange differences on translation, especially if your intangible assets are imported or acquired from abroad and the currency used in purchasing that intangible is foreign currency. So there is a net exchange differences on translation of the currency, the local currency, and the foreign currency used. So you have to disclose that also. Another is the carrying amount of intangible asset with indefinite life and the reason supporting the assessment of indefinite life. No? So you cannot just claim that your intangible has indefinite life. No? So you have to support it or the reason why you classify it as an intangible with indefinite life. No? So what is the very, very common example for intangible with an indefinite life? Of course, the um, goodwill, no? But that can be disputed. Why? Especially during those time that the corporation code here in the Philippines was not yet amended, and the corporation has only a limited life of 50 years, no? So you can always say that the goodwill is coexistent with that company. So when we say that the company has a 50 years life, then it goes also with the goodwill. But now, since the Corporation Code of the Philippines has been amended and the life of the corporation is in perpetuity or perpetual, no limit, no end. So it goes also that the goodwill incorporated in the company are also indefinite. So carrying amount of intangible asset with indefinite life and the reason supporting the assessment of indefinite life. Next is the carrying amount and remaining amortization period of intangible assets that are material to the entity's financial statement. So what is the remaining amortization period of the intangible assets? Why very important? Because the amount of the amortization will be affected by the period or the life of the intangible assets. No? Because the carrying amount is affected by the um, increases or decreases of the intangible through impairment, example. No? So the remaining amortization period, sometimes it is shortened or when the patent is written off or when the intangible is written off. No? There are cases like that wherein the patent or the intangible has no value. That's why the owner write it off. No? So we have to disclose that uh, those that are material to the entity's financial statement. And for me, that is very, very material. Why? Because it makes our um, financial statement highly misrepresented if we fail to report that in our financial statements. Next is the carrying amount of intangible assets whose title is restricted or pleads as collateral security. So what are the intangibles that are used as collateral or security to our loan or the loan of the company? So what are these intangibles, no, that can be pledged or can be used as collateral of the loan? So yeah, I happen to um, meet the IPO director of Malaysia, no, during my attendance of the World Conference on WIPO in Shanghai, China. And then I interviewed her, no, and according to her, intangibles are very much recognized in Malaysia and presented in the financial statement, such that when you acquire a loan in the bank, and then the bank will see that you have intangible assets in your financial statements, then they will give you an increased rating. No? They will give you an additional point for the presence of intangible assets in your financial statements. Okay? Next is the contractual commitment for the acquisition of intangible assets. If the intangible assets are acquired through purchase, no? So there should be a contract to purchase, especially if the intangible assets are acquired through installment or several payments. That happens also even if the transaction is within the group. Sometimes the term of the payment for the transfer of intangibles from a related party to another related party is done on installment. No? That's why uh, it should be disclosed also, the contractual commitment for the acquisition of intangible assets. And sometimes it is payable over the period of 3 years. No? So that happens. Next is the disclosure of intangible assets acquired by way of government grant and initially recognized at fair value. Okay. So usually these grants coming from the government sometimes are free, but in most cases they are not free. No, you are going to pay. Just like, for example, the franchise for the transportation, for the buses, they are issued by the LTO. They are being paid. No? Next disclosure, very important disclosure, is the amount of research and development expenditure recognized as expense during the period. Why very important? Because as I told you, in some cases, the amount of research and development that you can outright claim as an expenses, as operating expenses, are limited. No? There are cases na it is limited to 3% of the sales or 5% of the sales, in which case, if you exceed your claim of research and development expense, then it will be disallowed. And if it is more than 3% or 5%, then it should be capitalized. No? Capitalized as part of the intangible assets. No? So in this case, when the intangible assets are acquired through research and development, how do we value the intangible at cost? The amount spent for the research and development in order to produce that asset, no? In order to create that assets, especially software. No? So the amount of the research and development in that case should be capitalized and not outright expense. Why? Because the research and development costs are no longer operating expenses but should be capitalized as part of the asset being developed. No? And in that case, halimbawa, software. No? Okay. So those are the 15 items that we are going to disclose. So once you prepare now your financial statement, then take a look on what are these items that should be disclosed. So you have the guide now. You have the guide on what are the items that you are going to disclose in your financial statements. Okay? So let's have an example. So the example in the presentation in the uh, balance sheet, no? So we have here the non-current assets. So this the intangibles in this case is presented in the non-current assets or sometimes other assets, no? As a line item. So try to look at this. No, so balance sheet are presented in 2 years, no, with comparative year, so that it is easy for the user of the financial statement to make an analysis. That's why there's always 2 year uh, presentation. So for the non-current assets, the items here are property, plant, and equipment, net. We have security and other deposits. We have deferred tax assets. And then the other line items for these intangibles are patent. We have patent, no? And what is the valuation of this patent based on cost, no? Or fair value. So to situate the fair value, especially patent, if the patent has a fair value more than its cost, no? So we also have copyrights. So how are you going to value the copyrights? Sometimes this is the income approach or the earnings or the benefits that will flow to the company or to the owner or to the individual. No? So you have to disclose the patents, you have to disclose the copyrights, and of course, this is net of amortization. Just like property, plant, and equipment net, this patent and copyrights presented here in the balance sheet are also net of amortization. So when can you find that? In a disclosure also to the financial statement. No? So you have to disclose that also, the amortization claim for this patent and also for the copyrights, if there are amortization claimed. Okay, so example notes to financial statement. This is just an example. So the company has fully amortized trade name and customer contracts with gross carrying amounts of 2 million and 3.1 million respectively. When we say 2 million and 3.1 million respectively, we mean the 2 years, no, comparative as required in the presentation of financial statement. So if it is 2020, the other is 2019, no? So carrying amounts is 2 million for 2020 and 3.1 million for 2019. Okay, so that those are the carrying amounts respectively. The intangible assets will be derecognized on disposal or when no future economic benefits are expected from its use or disposal. So you have to derecognize. Why? Because it's of no use. Why no use? Because no future economic benefits already that will flow to the company or to the individual. That's why it is going to be disposed. No? Okay. So amortization expense amounting to 0.03 million in 2018 and none in 2019 is presented as part of depreciation and amortization under the administrative expenses account in the 2018 statement of comprehensive income. So, you have there, no? You got it. Halimbawa, it is not separately presented in the uh, administrative expenses, no, in the income statement. So, what are you going to do? No? The tax auditor, usually during the tax audit, they require the accountant of the taxpayer to break down this 3 million or whatever is the depreciation and amortization account uh, claim, no? So they require that it should be breakdown so that the amount for the depreciation and amortization of intangibles can be segregated from the lump sum amount, no? Under the administrative expenses account. Okay. So, here, what are the example in the presentation of the income statement? As the notes to financial statement a while ago states that it is included, no, in the administrative expenses, or in this case, in the cost of services, no, which is the cost of services, the direct cost for the company. No? So assuming that the depreciation and amortization as part of the cost of services here include the amortization for intangibles. No? So we are going to present that in our um, income statement. No? So, for the cost of the services, the breakdown are the salaries and employees' benefits, no, amounting to 354 million in 2020 and 212 million in 2019. No? So you can just imagine if you are an analyzer, just like si Muhammad, no? He's an analyzer. So good for you if you can also attend our certificate program in transfer pricing, because after that you can already be a transfer pricing analyst. No, we have the 10-day certificate program in transfer pricing that will include our new topics would be on tax treaties, permanent establishment, and international taxation. After that, you can be certified transfer pricing analyst because there is also a comprehensive examination. No? So if you are an analyzer or you are an analyst, no? So if you try to look at this depreciation and amortization, you already have in mind that this include amortization for the uh, intangible assets. So what are you going to do? So you have to require now breakdown of this 44 million for 2020 and 29 million for 2019. How much of the amount, total amount of depreciation and amortization, how much of that amount is the amortization and amortization for intangibles? Oh, so we have to break that down. So another cost of services that this company have are communication and travel, utilities, internet charges, rentals, and then supplies. Because the company here that I made as an example is a BPO, or business process outsourcing company, BPOs. No? So BPOs are not selling goods, they are selling services. That's why the direct cost for this company is cost of services. No? So you have the revenue or sales total, and then you have to deduct the cost of services in order to arrive at the gross operating income. And then once you have now the gross profit or the gross operating income, then you can um, claim now administrative expenses. And sometimes in some disclosure that we have, no, a while ago, sometimes the amortization of intangibles are reported in the administrative expenses. No? Because in this case, this is direct cost, no? As cost of services. Okay. How about this internet charges? What are these? Internet charges are for the use of the facilities, no? So they're being paid to the uh, service provider, internet service providers. So we also have rentals and we have supply. So those are just the example of this cost of services, no? It's presented. That includes amortization and depreciation of intangibles. Okay? So, as I told you, we cannot report in the financial statement if we cannot identify all these intangibles, because there are so many company owners that, oh, we don't have intangibles, no? So what are the intangibles that should be included also in our report, no? So this if ESB list of intangibles or the financial accounting standard boards, they release the list of intangibles, no? And the first is the marketing related intangibles. So when we say marketing related intangibles, they are intangibles that we use to sell, no, in order that we can market our products. And the example here of the marketing related intangibles are trademarks. Why do trademarks help in the marketing process? Oh? Because trademarks are the marks of the product, no? So once your product, you manufacture your product, and then you put a trademark on that product, it is easily identified by the customer. And when it is easily identified by the customer, it's easy to market those products. No? And once there is a trademark and the trademarks are very much well known, then it affects its sellability. No? Many people will buy the products if it has a very good trademarks. Why? Because trademarks symbolizes the product. And sometimes when the product is original, no, as proven by the trademarks that it has, then that product also carries with it the quality, you know, the quality, the good quality of the product. So these marketing-related intangibles are trademarks. There are so many companies that also enroll in the IPO their trademarks. And another marketing intangibles are trade names. Why? Because your customer will always look at your trade name, no? And when you have a trade name and you have your business, then people who know you and uses or um, try to look at your trade name, no, when they try to buy products, no, so they will also try to uh, discover that it is the real trade names, no? Because trade names, as I told you, carried also guaranteed that the product is genuine. Service marks, no, the service marks for those companies who are offering services, no. So there is what we call as service marks. We have also collective marks. No? This is collective for the group. And we have certification marks. No? So what are these certification marks? They are coming from usually well-known issuer of that certification marks. No? So if you are a holder of that certification marks, then it's very easy for you to market the intangibles. Another intangible is the trade dress. No? There is a unique color, shape, or package design for that dress. So the trade dress is already considered as intangible. Internet domain names, no? That's why I asked some of the clients that said to me that they have no intangibles. No? Sabi ko, do you know what intangibles are? Yes daw, sa goodwill. But how about those other things that should be included as intangibles, no? So they do not agree, especially the internet domain names. For them, it is not intangibles. But of course, it is, no? And in fact, this is given here as an example, no? Or identified na intangibles, no? Another is the non-competition agreements. What are these non-competition agreements? So, if there are non-competition agreements, then they agreed to cooperate, no? There is no competition anymore. Okay. Next are the customer-related intangibles. So, what are these customer-related intangibles? Examples are customers list, order or production backlog. Why this order or production backlog becomes intangible? Why? Order or production backlog means increase in sales, no? Okay. Because yung production backlog might be caused by uh, crowded orders, no? So customer contracts and related customer relationship and other customer related intangibles. No? So customer contracts and related customer relationship. Next is the non-contractual customer relationship. So non-contractual customer relationships arise from a certain act of the parties pero walang kontrata, no? Unlike dito sa customer contracts, no? So there are non-contractual customer relationships. Okay. So we have also our example of intangibles, the artistic related intangibles. So play, operas, ballet. Oh, you can just imagine that. There are also intangibles. Books, magazines, newspapers, other library works. They are also already uh, treated as artistic intangibles. Also, musical works such as compositions, song lyrics, advertising jingles. No? So, the politics is already in the air in the Philippines because there will be uh, election next year, no? So this advertising jingles, the composers here will earn so much because of this composition of the advertising jingles that these political parties will purchase, no? But of course, for those political candidates, their acts are regulated by the COMELEC, no? Omnibus Election Code. So musical works such as composition, song, lyric, advertising, jingles, those are examples. So, um, included in the artistic related intangibles are pictures and photographs, no? So pictures and photographs in the older days, it's not included or even part of the intangibles. But right now, they are already classified. Okay, sobrang lamig na. Okay. So, pictures. How are you going to get these pictures? Sometimes pictures are taken, no, just from the surroundings, or sometimes pictures are also being painted, no? Those who paints, no, and then they are going to sell that at a very uh, expensive amount. No? the pictures, especially those who painted pictures with names already. They're already popular, so their works are much uh, expensive. And we also have photographs. No? So what are these photographs that are artistic or related intangibles? No? Okay. Photographs that satisfies the work of art, no? So we have video and audiovisual material, including motion pictures, music videos, and television program. So they are related intangibles. That's why our creators, no? Our creators, our YouTubers, no? Your assets there are intangible, so you have to value. Okay. Contract-based intangibles. So what are the contract-based intangibles? Meaning there are contracts, no? So licensing, royalties, standstill agreements. So there is an agreement, no? So when we say licensing, meaning there is a certain franchise of certain business that license another to use and have this kind of business also, no? That is licensing. Also royalty. Royalty stands for payment of the intangibles. When there are intangibles and then you use it, the payment for the rental of that intangibles are called royalties. No? And standstill agreements, that is agreement between the parties. And then we have, for the contract-based intangibles, we also have advertising, construction, management service, or supply contracts. No? So that is very common, yung intangibles na to. No? For advertising, especially if um, the amount is material, then this advertising really have a contract. And construction, yes. No? So for construction, the contractor and the owner of the project. No? So construction are very important. There are contract for this, no? For the construction that are signed by parties. And then we have management service or supply contract. So for this management service, why do it become intangibles? Because an example, the management services are so effective, no? And it has a standard, so it becomes an intangible assets. Service or supply contracts, no? So that is contract-based intangibles also. And then we have lease agreements. We have construction permits, we have franchise agreements. No? So these are example of contract-based intangibles, meaning these intangibles cannot exist without the contract. Okay. Another example are operating and broadcast rights. No? So even the rights are intangibles. Why? Because that is already reserved to you, no? So that you can use it. Use rights such as drilling, water, air, mineral, timber cutting, and route authorities. No? So, yung rights over the drilling water, ito yung sa mining claims, no? Mineral, timber cutting, and route authorities. Yeah. Servicing contracts such as mortgage servicing contracts. So you have mortgage, then they are also considered as intangibles, no? Mortgage servicing contracts and also servicing contracts lang. And then we also have employment contracts, no? So how do you arrive on the employment contracts? Before the employee is being hired, no? There is always an employment contracts. Okay. So usually the employment contracts will sign this employment contracts, the employee and the management. No? Okay. That's why I give you all this kind of intangibles so that you will have a guide, no, in preparing your financial statements. Technology-based intangible assets. So what are the technology-based intangible assets? We have the patented technology. No? So how are you going to patent the technology? Technology is very, very dynamic. No? It's very fast in its development. So how are you going to patent that? And then another intangibles are the computer software and mask words. No? So computer software are really intangible assets. And then unpatented technology. Oh. So unpatented technology, even if they are not registered with the Bureau of Patent, now IPO or the Intellectual Property Office, they can still be recognized, no? Kahit hindi sila naka-register sa IPO. Oh. So, databases including title plans. You can just imagine yung mga databases. They are intangibles, as I told you, because they are repository to the very expensive information. Especially if you are doing transfer pricing analysis, then you cannot do away with these databases. But accordingly, in this example, databases also including title plans. So what are these title plans? Oh? And then we have trade secrets such as secret formula, processes, and recipes. No? So trade secrets sila. That's why they have the value because they are secrets. But once they are already well known, no, or known to other people, then they cease to be a secret. No? Wala ng value. Why? Because they are no longer valuable. Okay. 5 minutes break lang po, no? Ano lang tayo. Ilan na yung nandyan, Hari? Okay. So, let's continue after 5 minutes. Magsi-CR lang po. No longer valuable. Yung doon bukas ba? Doon na lang yung buksan mo. Wag yan. Okay, so let's continue. I have given you examples of intangibles. Why? Because for me, it's very important that you identify all these intangibles in order that you can disclose them properly in your financial statements. No? This is another framework for classifying expenditures on intangible investment. So, what are these intangible investment that we have? No? So, classification and the example of intangible investment expenditures. So for the first classification, we have information system infrastructure. For those who are computer literate, they understand this better. No? So what are these information system infrastructure? So this includes the software and hardware of the computer, no, for the information system. So what are the expenditures that are included, no, for the information system infrastructure that are intangibles, no? So this will include wages of staff involved in information system, the planning and development, the commercial enterprise system, the software, the databases, other computer services and licenses. So these are all expenditures. No? For the licenses, these are evidence. The documents here or the supporting documents here for the licenses are the contract, no? The license contract. For other computer services, this can be supported by receipts, databases, this if they are being purchased, no, but sometimes in the information system you can create also your own databases, but in order that you can have the information that will be deposited in your databases, of course you are going to buy also information or spend some money in order to get this information, no, that you can put in your databases, especially commercial databases. What they are trying to do is to get information from public information, no, but these databases are now being constrained because of the Data Privacy Act, no. So they're very careful because sometimes the information that you will deposit in your databases, if that violates the Data Privacy Act, then you are candidate to a litigation. No? There's probability that you will incur litigation cost because of some violations of the Data Privacy Act. No? And also software. So how are you going to purchase? No? These software are purchased from providers or sometimes licensed. No? Commercial enterprise system. We're talking of information system infrastructure, no? And planning and development. Planning and development of the information system. And then wages of the staff involved in information system. No? So these are sometimes employees or can be contractual, hired only for a certain purpose. Excuse me. So another classification for investment in intangibles are production and technology. Excuse me. So for production and technology, the expenditures involved are on the product and processes, research and development. No? So usually research and development are major expense. No? And we also have product design, engineering, and development. Because this is production. No? So you have the product design, also the engineering and the development of the products, especially if your product is highly sophisticated. No? Uh, Process design, engineering, and development. So product design is different from process design. No? Product design is the outcome. Process design is the processing in order to arrive at that product. No? The process that you are going to do. And technology adoption. You have to adapt the technology. But of course, it will incur you some expenditure. Quality control system, very important, no? For those companies who are uh, having very sophisticated product, this quality control system is very important, and these are manned by experts usually. No? Proprietary technology, these are being registered and protected. No? We have patent. Patents are also registered by the owner, and also the designs and the licenses. No? So that is on the production and technology. So these are example of intangible investments. Human resources. No? So human resources are, may component din siya na intangibles. No? There's a component ang human resource na intangibles, not only physical. No? So intangible investment on human resources includes wages of human resource managers. No? Why managers? Why not employees? No? Because we're talking of intangibles here. No? So also, expenditures on re-engineering incentive system. No? Re-engineering incentive system, you have to revise the system in giving incentives to the employees. No? Staff development and training, they are also intangibles. So the staff development and trainings are very important in human resources. Why? Because you cannot have competitive employees when you fail to spend on this staff development and training, because they are very, very important to improve the skills and knowledge of your employees. No? So they become effective in their work. Staff goal planning and evaluation. Okay, very important, the planning and evaluation, because you have to plan your goal. Later on, I will discuss also the one coming from the Japan economic trade and industry. And they are very specific. Oh, they are very specific. That's why this staff goal planning and evaluation are very important, because the result of this are intangibles. No? So, goal and planning and evaluation. So you set up your goal, no, through planning, and then once your plans are in place, no, it is already very specific, then you have to evaluate that your plans are now being applied or being followed. No? So information and knowledge database, very important. No? We have what we call now as the AI, or the yung knowledge intelligence, no? Artificial intelligence. Information and knowledge databases, no? They are very important and commercialized now. No? So information and knowledge databases development, very important in the company, especially for the human resources. Programs for health and motivation of workforce. Labor relations, healthcare, fitness. No? So, especially during the COVID, no? There are so many companies that adopted some measures for stress management of the employees, especially those who converted their work into home-based, no? Home-based na. They're no longer traveling, going to the office. So there are some adjustment that the employees must have And of course, because of the pandemic, there's health problems also. So that some of the companies adapted programs for their employees in order to lower their stress, and in order to have their employees have a stress management. No? And of course, during those time, labor also has some um, actions or some benefits given to the employees during those times. No? Health care and fitness. So these are the programs adopted by the company. Also healthcare. There are some companies na meron silang fitness gym, no, wherein the employees are required to make some fitness program or exercises or workout at a specified schedule. No? So those are part of the programs of the human resource, no? And those are intangible investments. No? So if you try to look at, if you listen to people saying that there's no intangible in their office, and you are going to identify what are these intangibles, then you can say now that the financial statement of these companies are misrepresented. Huh? Organization and administration. So what are the intangible investment expenditure on this? You have the wages of staff involved in organizational design and management techniques. No? So very important, the organization and administration of the company. So that the intangible investment are the wages of the staff, no? The employees who are involved in the design and management techniques. No? So what are the design and what are the management techniques that are going to be uh, imposed or applied or adapted by the company in order to be effective? And then the corporate governance structure, imagine the corporate governance structure. Anyway, this corporate governance are being mandatorily imposed by the SEC, no? Required by the SEC, the good corporate governance, especially in corporations. Networks and strategic alliances, no? These are intangibles. And you are going to spend also for your networks and strategic alliances. Why? Because you cannot do it alone. No? So you must have networks and you must have strategic alliances for those networks, no? That you have. So who are networks? These are also organizations. Strategic alliances, these are organizations also that um, are alliance or that are friends of your organization, and sometimes you have the same purpose and the same programs. So what you are doing as an organization, these strategic alliances are of benefits to you. No, they are helping the organization. Administrative structure and system. So what are this administrative structure and system of the organization and why they are treated as intangible investment? So the administrative structure and systems, if they are very effective, they also are intangibles to the organization and administration of the company. Finance system, very important to the company, no? To the organization, the finance system. And also the accounting systems. Why? Because you cannot do all these tasks that we are talking here, the disclosure, the recording, if there is no staff to work for it. No? So these accounting systems, these finance systems, they are very important to the organization. And then we have customer linkages, no? Customer linkages, as what we learned, are also intangibles, no? So since they are intangibles, and we're talking about intangible investment, we have to spend on distribution and market research systems, no? In order to have linkages to the customer. No? So you do market research. Who are your customer? No? The classification of your customers, the geographic location of your customers. You are going to make a research on that in order that you can reach them up. No? And also expenditures on advertising. You're going to advertise because advertising communicates to your customer about your products. No? And then we have trademarks. We have brands. No? Trademarks and brands are both intangibles. Why? Because trademarks are the marks on your products that the customers look for before buying the product. No? So they are looking for your trademarks and also for your brands in order to buy the product. No? Once they are sure that that is your product and they have been your customers, then they will buy your product because they are expecting something from your product. No? Sometimes the trademarks and the brands carries with it the guarantee that your product is genuine, that your product is not fake. No? And it carries with it also assurance that there is quality of your product. So for customer linkages, you have to spend also on customers list. Oh, customers list. When did you get this customer list? Sometimes you can get this from your own internal information, just like in your receipts. No, who are those customers that appear in your invoices? So you can make a database out of that, no? Because they are your customers, as evidenced by the sales report that you generate internally. And then the subscribers list, no? Just like if you are social media influencers, you have subscribers. No? You can always see who are your subscribers. And then also the potential customers list. So you can get that sa market or sa mga some cases in organizations also or associations, no? So you can get those customers list or from your competitors. Okay. Another point in the intangibles, no? In the recognition of intangibles in order that we can disclose them properly in the financial statement. No? This is coming from the Enhanced Business Reporting Consortium, version 2.1. No? So, they have the analysis of this monetary capital. No? And according to them, monetary capital is tangible. No? Tangible monetary capital is reported on the balance sheet. No? So, monetary capital, how much is that? No? So in the stockholders' equity or the whole assets, no? The monetary capital. And then it is reported on the balance sheet. But monetary capital also has intangible aspects. So, so the monetary capital is not only tangible. So there is also intangible aspects of the monetary capital as identified by management. And what does this monetary capital, which is intangible due to the company, affects the ability of the company to fund its operation and investments? Because this is monetary capital, and of course, what is being used in the company in order that it will work? No, it's the monetary capital. That's why we have what we call as working capital. No? So, it affects the ability of the company to fund its operation and investment. So, what are the examples of these intangibles? The capacity or access to capital, the quality of earnings, the character and reputation of the company's major debt and equity investors, and the stability of the shareholder base. So if you go to the bank and then you ask for a loan in order to augment your capital, then these intangibles are being considered. No? Just like one example that we have is the group of investors coming from Spain who uh, plan to expand their operation of their restaurant in the U.S. No? Pundits in the U.S., they don't want to bring capital to the United States. They wanted to acquire loan from the banks in the U.S. in order to fund their business. So what the banks did was to um, evaluate the financial capacity of the investor or the shareholder. No? That's why the major debt and equity investors are very important for the company. Why? Because in making loans with the bank, they are also evaluated. And if there is a capacity for them to lend, no, or to make this money, and in that case, those businessmen coming from Spain who expand their business in the United States have a very good track record in their own countries in terms of business. No? So they are very good in business. That's why it makes an intangible for the company that they form in the United States. And what does these banks in the United States did? Release funds for the expansion of their business. No? So they don't bring along capital coming from Spain. They just acquire capital in the United States. No? And they make use of their own intangible assets, which is the uh, debt and equity of the investors, no? And the stability of the shareholder base. Physical capital, no? So physical capital, they're tangible, but it has also an intangible components. And what are the intangible components of the physical capital, no, that are identified by the management? They are plant location, no? Kaya there are 4 P's in marketing, eh. No? Because plant location is very, very, if that is strategic, then this can be an intangible for the company. No? Plant location, plant adaptability, raw material accessibility, and reliance on strategic resources. Why is it that these multinational companies outsource or make subsidiaries of their products and services? Because of this plant location, plant adaptability, raw material accessibility. So if you are a service company, so where are you going to put up your company? No? So many US company put up their companies here in the Philippines because Filipinos are English speaking, no? And they can deliver the work uh, yeah, very good, no? They are very good in speaking English, so they can relate to the customers based in the US, especially in product knowledge and, of course, yung customer service, no? So it affects the value of the company. So plant adaptability, raw material accessibility, reliance on strategic resources. Okay. Uh, in Cebu, I found there one company who is making very, very small parts of the cell phone. The one connecting the battery to the operating system of the cell phone. And that is a very, very small equipment, but it is gold, no? It is being done there in Cebu. And why? Because they also have this raw material accessibility. The gold is just like thread, no? it is being put in a spool. And according to the in charge, one of their problems are that the gold put in the spool are being uh, taken by the employees, no? Because the raw materials of that gold, no, they buy it here in the Philippines, no, because we produce gold, no. Our Bangko Sentral has enough gold, and they have material accessibility for that. Why? Because that part that connects the battery of the cell phone regulates the battery. Oh, that's why it will not consume the power of the battery. It will automatically shut down if your cell phone is not used. Very, very good inductor yung gold natin. And we have a supply of that here in the Philippines. So they put their company there in Cebu because of material accessibility. Also reliance on strategic resources. Okay. Next, we have relationship or social capital. So relationship or social capital. I love this topic because I also discover so many kind of intangibles. No? So management identification of relationship with other organizations and third parties. Why relationship capital is very important? Because you will not thrive alone. No? So it regards as important. No? So this can be both tangible. So for the tangible aspect of relationship capital, we have contracts, license agreements, we have joint venture agreements and alliances. No? So those are the tangible. For the intangible, we have long-term relationships, no? With no contractual basis and personal relationships. So those are relationship capital. So a good relationship with your co-organizations and with your third parties. Okay. We also have organizational structure capital, no? So in this, we have management identification of organizational resources not reported on the balance sheet that are independent of its employees. No? So that can be tangible. So for example of tangible organizational capital, we have patents, trademarks, copyrights, formulas, and databases. Why? These intangibles are, according to this, is tangible because they are now can be identified. No? And the intangible aspect of organizational capital are the employed but undocumented methodologies and processes. No? Why intangible? Because you cannot pinpoint it. No? So undocumented methodologies and processes, but you already using it or applied already that in your company. Okay. Human capital, management identification of attributes of workforce. That's why human capital are very important. No? So, can be tangible employment contracts or intangible. So the intangible in human capital includes education of the employees, no? The skills of the employees, the abilities, the experiences, the attitudes and accomplishment. Can you measure all this? That's why in intangibles, that's also true in transfer pricing. In intangibles, this can only be measured by a statistician. Why? Because accomplishment, attitudes, experiences, you cannot measure them physically. That's why they are intangibles. No? How about attitudes? How can you measure attitudes? It will just be indicated or revealed. No? Your attitudes mo, your positive attitudes mo, which also make a positive outcome. No? So because you have a positive attitudes. And also the accomplishments, they are all intangibles. No? So in this example on the human capital, the intangibles here are education, skills, abilities, experiences, attitudes, and accomplishment. They are intangibles because they have no physical existence, but they are value drivers to the company. And they are part of the human capital. Ito na. These are very, very specific. These are very, very specific for the intangibles. No? So I made some research on this, and I was so glad because I found the intangibles as intellectual asset-based management of the Japan Ministry of Economic Trade and Industry, and they were able to make a guidance on this. No? So the guidance on intellectual asset-based management. No? So for them, intellectual assets means intangible assets. No? So management stance or leadership, they are considered as intangible. No? So degree of sharing and penetration of management stance and target. Why? Because if you are in the management, you are going to have a goal. No, you have to develop your goal, and then you have to evaluate if your goal has been achieved. No, so in this example on the intellectual asset-based management of the Japan, the management stance or the leadership, no, of the management, their efforts, their uh, actions, no, and the degree of sharing and penetration of management stance and target. So there is penetration of management stance and target, meaning they really wanted to achieve their goals. No? So what are the indicators? Degree of internal penetration of management principles. So what are the management principles that are um, clearly communicated to the employees, no? So there are management principles, usually it is printed and displayed in the office, no? So uh, degree of internal penetration of management principles, those are one of the indicator. And then we have the external transformation of information by top manager or external PR activities. Also, in this case, the management are really actors on this initiative of the company. No? So this external transformation of information by top managers, these are indicators because you can see, when it is an indicator, you can see there is a result that indicates the action or the initiative of the management. No? So they have external PR activities. So what are these PR activities? Public relations, no? They are promoting public relations for the company. And then we have the selection and concentration status in products and services. No? So selection and concentration. That's why if you have some work to do, you have to focus. No? You have to focus on it, concentrate on it in order that you can assure success. Because if you are out of focus, then you are doomed to failure in products and services. So like technology, customers, markets. So you have to concentrate on those aspects. And the indicators. So the indicators that you are successful. Competitiveness of major business. So sales, profit, and profit rate. When we say competitiveness of major business, meaning that your product, in terms of sales, it gains market shares. And in terms of profit, you earn profit from the business. And of course, you have a higher profit rate. So those are the indicators that this Japan Ministry of Economics on Trade and Industry are highlighting in these papers, no? Proportion of major business to the operating profit. When we say proportion of major business to the operating profit, the Japan companies has many companies involved in the business. So this company, you can evaluate its performance if it has a major contribution to the operating profit of the company. Also, another indicator is operating profit margin of major business. How much is the operating profit margin of the major business compared to the others, no, internally? Okay, so these are the indicators. And then we have the weighted average of the number of companies providing the same product or services. Why? Because in your study, you have to make a study of all the companies which are your competitors, no? So review performance of unprofitable department. For example, you have many departments, no? Considered as business center. Why? Because you can gauge their profit. No, you have the records to know if they are profitable or not. So you have to review the performance of this unprofitable department. No? And then you have to know also the degree of the research and development concentration. Also, the differentiation of market and the employee assessment. So these are the indicators. No? So the employee assessment, differentiation of market, the degree of the research and development concentration. All these indicators should, excuse me, all these indicators should make a positive result to the company. No? That's why they are considered as intangible. Okay. Knowledge creation, innovation, speed, capacity, and efficiency of new value creation, speed of business management. No? So they are intellectual assets, no? Sabi pa dito. So what are the indicators of this knowledge creation or innovation? When we say knowledge creation, we continue to update or upgrade our knowledge. When we say innovation, we continue to research to improve the products. And there is speed, not really waiting for how many years to pass. No? That's why when I went to Japan on a study grant, I was so amazed on the attitude of the Japanese people. No? Because I try to look at them that they are not wasting time. Why? Because when you use the escalator, for some of us Filipinos, we'll just stand on the escalator and wait for us to arrive at the stairs, no? We want to go. But for the Japanese people, no. They are riding in an escalator and yet they are running, no? They are still running. So there is speed. Speed is very important to them. Why? Because it's an indicator of success, no? Okay, how can you tell yourself that you are successful when the very simple thing, you can do it for 2 years, 3 years. That's why speed is very important. And that is one of the indicators that they have in these intangibles, no? This intellectual asset management. So speed of business management. No? They're not wasting time. Indicators, research and development expenditure or ability development cost versus sales. Oh, you can just imagine, they have what they call as ability development cost. You cannot hear that here in the Philippines. No? So research and development expenditure versus sales. So the effectiveness of the research and development as against sales. That's why the result of this research and development should have a result on the sales. If your sales is higher, then meaning the innovation that you undertake is successful, no? Outsourced research and development cost ratio. no? Also, number of intellectual property owned, economically meaningful term. No? So the intellectual property that you own. No? Although in the previous webinar that we have, I showed to you that it is China who is the registrant of uh, the most number of applications for the intellectual property, no? And but Japan is something like third also. So with India, no? Okay. Employees' average age and increase or decrease from the previous year, or the turnover of the employees, no? So new products rate. What is this? The result of new products rate will show your innovation, no? Your creation, your new creation. Because if you have new products, you have developed new products, meaning your innovation and your knowledge creation has been put into good use, and that is the result. No? External negotiation power. What is external negotiation power? This is the negotiating power, no, of the management. All relationship. Degree of negotiation power and connections over and with external parties or clients, just like customers and funding sources such as upstream and downstream parties. No? So what are the indicators for this external negotiation power? The weighted average or market share of main products or services in the main business. Why? Because the companies usually has the main business and with other business. No? This main business sometimes contributes a lot to the overall sales of the company. And then the indicator of this external negotiation is degree of customer satisfaction. That is also one of the indicator. And how are you going to prove that there is customer satisfaction? If your customer uh, has a second buy, you know, they buy your product and then they buy again and then they buy again, meaning they are satisfied with your product. But when the customer buy only once and then never buy again your product, then there is no customer satisfaction. No? Another indicator is the changes in customer unit price. No? So, changes. Then we have indicators. New customer sales ratio or growth rate of new customer or members compared to those of previous year. Also, these are very specific. I'm telling you about intangibles. And in your own mind, even in my own mind, I cannot imagine that these are also intangibles. But of course, I believe these are intangibles. But I cannot just think it myself. No, that's why I am very happy that I was able to research on this. No, so the indicators on this intellectual assets are the price elasticity value of product sales as compared to changes of the cost of goods purchased, or the price pass-through capability. And another indicator is the price elasticity value of the goods purchased. No? The first, that is the product sales. Here is the goods purchased compared to changes in material market conditions or the negotiation power, and the financing capacity of the company. No? So those are indicators that the company is doing well. Teamwork. No? So teamwork are also intangibles. Organizational knowledge, organizational power or collective strength, and solidarity as a unity of individual capacity. Imagine, this is the intellectual asset in management of these Japanese companies. And what are the indicators? These are the in-house improvement, proposal for quality control system, number of proposals and improvements achieved. Okay? So, in-house improvement proposal. Number of lateral projects. Also, degree of employee satisfaction. No? Also, incentive system, including yearly contract system, job living ratio. These are people or employees who are leaving the company, no? So they also monitor the rate, no? Okay. So if the job living ratio is high, meaning you're not successful and there is no teamwork, no? So teamwork for them is an intangible. Risk management governance, no? So governance of the risk management is very, very important. That's why they consider that also as intangible. And that is identification, assessment, and response, no? And the indicators are the compliance system, number of public arrangement, diversification of risk, risk of being an acquisition target, no? If your company is doing well, and then other companies would like to acquire your company, no? So there is a risk on that. Compensation claims in pending lawsuits, and information leakage, no? Especially the secret information, okay? Trade secrets, no? We are running out of time, no? Okay, coexistence in society, no? So coexistence in society is also an intangible. Status of contribution to the community and society, and what are the indicators. Very important po ito, no? This is the amount of environment-related investment. Why? Because for me, this pandemic is also an environment-related investment. Why? Because the consumption and the oil consumption of the, just like here in the Philippines, was lessened, no? Because the people only work from home. Number of SRI funds that adopted the corporation, or the corporate image survey and ranking results, no? So these are the indicators for coexistence in the society, meaning you as a responsible managers of the society, no? So may mga environment-related investment. And in fact, Japan is one of the countries that produces green energy. At saka yung carbon emissions, no? They try to lessen the carbon emission in the air. Okay? So these are investment or intangibles as provided for by the authors, no? By a young on selecting core components of intangible investment, no? So these are the possible components of intangible investments. No? We have discussed that already, the computer related, and then the production and technology, no? They have there the know-how, no, included. We have the human resources, no? For the human resources, we have the organized training, and then we have the learning by doing. What is this learning by doing? You let the employee work, and along the way, while doing the work, the employee learn, no? Activities to improve health and motivation of the workforce, no? So these are the programs adopted by the company to improve its human resources, especially, as I told you, during the pandemic, no? And remuneration for innovative ideas. There are some companies that offer special awards or special remuneration for employees who discover something through research and development, or along the way doing it works, it discovers something. So the company, the management give special remuneration. No? Organization of the firm, new methods of organization of the firm as a whole. No? So that new methods has been adapted or crafted by the companies. So that is an intangible assets. No? Setting up networks, and then new working methods in administration and finance. So they are considered as intangible assets. External, no? So those are internal. So for the external, we have marketing and sales. We have advertising, brands, name and symbol of the firm. This is the name and symbol of the firm. They have their what we call as a symbol, no? That sometimes it's a figure, but you cannot understand it sometimes. But it is always there as their symbol of the firm, no? Customers list, subscribers list, list of potential customers, no? Product certification, quality certificates, and goodwill. So those are external. No? Industry specific, mineral exploration, entertainment, literary and artistic, and milk quotas. No? In some countries that produces in huge amount milk, may quota sila with some other countries. Just like in the Philippines, we have also sugar quota. No? Okay. Measuring intangible investment by Bosselman. No? Core elements, according to them or to him, the core elements of intangible investment are research and experimental development, education and training, software, marketing, rights, and mineral exploration. So that is according to this author, Bosselman. And then there are supplementary categories of intangible investment, which are development of the organization, engineering and design, construction and use of databases. That's very important. Remuneration for innovative ideas and other human resource development, no? Excluding training. So, Measuring Capital and Technology, this is also a book by Corrado, Carol, Holten, no? So, for computerized information, no, we have computer software, on-use, purchase, and custom software, and we have computerized databases. That is for capital and technology. We also have scientific and creative property, no, under the science, engineering, research, and also the mineral exploration and the copyright and license cost. Okay. Other products, development and design and research expenses. We also have economic competencies and then linking intangibles to company performance, no? Because the indicators or the result of these intangibles, because they are value drivers, are the performance of the company, no? So for management leadership, the company performance can be seen through strategy execution and through communication and transparency. No? For the organization, it can be seen through technology and processes, human capital, workplace organization and culture, innovation, intellectual capital, and adaptability. Very, very important for the organization is the adaptability, innovation, yes. And also the relationships, the brand equity, the reputation, and the alliances and networks. From Sambon et al., we have non-physical sources of expected benefits, and those are intangible, like intellectual properties, no? So intangible assets, so yung with legal or contractual rights, patents, trademarks, design, and there are separately identifiable assets and goodwill, no? So we learned in the morning about goodwill, that goodwill has no finite life, hence goodwill cannot be amortized, no? So prior intangible investment in organization, management expertise, geographical position, monopoly, market niche. The goodwill, if we try to analyze the goodwill, goodwill is realized if you buy or acquire a company. And goodwill is realized by the company itself. And one of the reasons that it has goodwill is by monopoly. That's why in my book, Basic Transfer Pricing, I was there, although there are some who make comments, no? Who challenged my opinion that barrier to entry are also intangibles. Why? Because monopoly market are intangibles. Why? Because if you have monopoly in the market, then you can always command sales of your product because you have no competitors. No? Measuring intangible to understand and improve management, the three C's, we have discussed this a while ago, the human capital, the structural capital, and the relational capital. Okay? For one one minute more. I want to discuss to you, saan na yun, Hari? Okay. So I want to discuss another example of the presentation of the intangible assets in the financial statement, no? And in this case, these are actual na financial statements. In this case, the intangible assets here classified under other non-current assets are the software and licenses, no? So this is presented under other non-current assets and with a comparable figures. So there is for the disclosure, there is always an explanation, no? So there are explanation on some other accounts, and these are the explanation on the intangibles, no? So in this example, the table below shows the movement of the software and licenses as of March 31, 2020 and 2019. So these are the example on the disclosure of intangibles in the financial statements, and in this case, the software, no? So there is a balance at the beginning, the additions and balance of the year end, and then the accumulated depreciation at beginning of the year, no? And then the amortization during the year and the balance at the end of the year and the net book value or the net amount, no? So this is very helpful. Okay. Another is the other assets, no? These are the disclosures in the financial statement, no? So under other assets, okay? So in this example, we have the digital wallet, no? So that is very important and is disclosed under other assets, no? So in this example, we have the digital wallet, and what is the explanations, no? So the explanation is that digital wallet, this account pertains to the company's electronic wallet used for operations. The balance of the wallet is secured by the reserves maintained by the affiliated company ABC Inc. So that is very simple, no? Okay. So although there is a continuation here in the note 9, financial liabilities at amortized cost, we can identify this as intangibles like for example, on the very specific, no? So you can classify uh, these other assets, no? But in this example, uh, our example here is only on the digital wallet on Note 8. No? So I have given you some of the examples, just like this digital wallet, the software, and the patent, and copyrights example. So I think that makes our study complete, no? So what we get today in the morning, we have our accounting standards, IS 38 for recognition and valuation of intangibles, and in the afternoon, the presentation of intangibles in the financial statement. And in the afternoon, I also give you the very specifics of the intangibles in order that you can identify them and you can report them properly in your financial statements, no? So with that, I would like to say, huh? Okay lang. So with that, I would like to say thank you to all our participants, and we monitor also your attendance. That's why we are going to give to those who have completed their attendance sheet. We will give the e-certificate. Okay. So we will answer questions. Okay. Sige.
Ma'am, question po from Ma'am Lilian Yao.
Okay.
Intangible po ba ang rental sa cloud-based accounting software? Or pwedeng i-direct as part ng operating expense?
For the rental, hindi po siya, hindi, rental expense po siya. Hindi po siya intangibles, but you can spend outright expense po siya because it is rental and it is on a periodic basis, and it is an operating expenses that can directly attributed to the operation. Kailan maging intangible yung ano sabi niya, digital cloud?
Cloud-based accounting software.
Okay. Kailan siya magiging intangible? If your cloud reporting software is already licensed to you and you pay a lump sum amount for that, no? But I think the marketing structure of these developers has changed, no? Instead of requiring you to pay a lump sum amount, what they are collecting now is only a subscription fee, which is the rental, no? And in that case, the rental is outright expense on your income tax, no? Kaya nga operating expenses siya, hindi siya intangibles, no? But of course, it is related to intangibles, but it is an outright expense, operating expenses. Okay?
Next, ma'am, what about claims from lawsuit other than compensation? Ano pong treatment?
Other than compensation, lawsuits. So
Lawsuit.
depending on the nature or the purpose of the lawsuits. What is the reason why there are lawsuits? No, it can also be, it will arise from intangibles if the cause of that lawsuit is intangible. So depending on the cause of the lawsuits, why the company incur that, no? Halimbawa, it is depending the brand, no, or the patents, then that can be classified as intangibles. Okay, next. Okay. So I would like to say thank you po to all our participants, including Akbar from Indonesia. No? Thank you very much. And see you in our future webinars.